As we roll into July, roll into the American 4th of July, coming up quite quickly, I want to give a little best of today, a little best of from one of my favorite guests, Tom Basso. If you've not had a chance to listen to Tom before, well, here is your chance. And if you've listened to Tom before, and perhaps maybe not for a few years, this is your trend following reminder. Look, you can go onto any of the social media platforms. You can listen to nonstop predictions, nonstop forecasts, nonstop nonsense all day long. That's not what this conversation that you're about to hear, actually, it's 3 separate interviews combined together, but that's not what this conversation is about. This conversation is about practicality. This conversation is about reality. And ultimately, this conversation is about making money in the face of uncertainty. And ladies and gentlemen, that's what it's all about. I hope you enjoy and see you again next week. My guest today, and I don't know how many times he's appeared exactly on this podcast, but my guest today, Tom Basso, is probably one of the top 1, 2, or 3 guests that helped to make this podcast, arguably number 1. As typical with Tom and myself, we cover all kinds of topics in the trend following space, the life space, the market space, a wide range. And just remember also, my book about Tom, Trend Following Mindset. Check that out. Without any further delay, let's jump right into my conversation with Tom Basso, and I hope you enjoy the ride. How do you feel now, and how does society feel now? Your observations, your self-observation, and your observation of society.
I personally have been very content to sit back and watch what seems to be a whole lot of carnage out there. I feel for people who are getting hurt by it, but at the same time, many have not really planned very well. I know you're into trend following, I'm into trend following. Being a trend follower has been pretty easy lately. You just should be either short or out.
On equities, you mean?
On equities, but bonds had a rundown too. Energy prices have had a huge run up. There's been a lot of pressures on the economy, inflationary pressures, interest rate pressures, all that stuff. Yet, if you're a trend follower, it was relatively simple to position yourself so that you would be very content right now.
You feel content. So you personally, you're A-OK. You're the same Tom that's been the same Tom for decades. You've got your life rules set. You've got the way you want to live. The last 4 or 5 months have not changed any of that for you.
No, if anything, my wife and I decided on a 4-part plan to sell one of our 2 houses. We moved up to the mountains into our second home, which we do every summer anyway. So no change in plans there, except we booked a massive profit on the sale of the place down in the valley. And my wife, the real estate expert and full broker and everything, is tracking statistics on the real estate market in Phoenix and is already seeing 4 to 5 times the supply on the market. The time on market is starting to creep up. Prices haven't really caved that much. They're probably going to when all these people get a little more itchy. The fact that they're not selling their homes at premium prices like they were. The second part of the plan is to take the equity and give it to a money manager. I happen to know one. So I'm running more money these days from the sale of our other property. And then phase 3 is to go out and start looking when the prices start caving in next winter sometime. We'll probably be out looking at places. Phase 4 would be to build out a new house with a sound studio for me so I can deal with all these interviews I do lately. Ability to do a little bit more professional webinars, some videos that are just help videos for traders. I want to talk a little bit more about trading platforms and how to use them properly and not use them, or how to use them improperly, let's say. I'm very content that we're going through the pre-ordered plan, that everything's working out exactly the way we thought. My trading, I haven't changed the thing. I do the same thing over and over again in boring fashion. I've loved the new Substack forum so I can just say what I want to say if the mood strikes me. So, yeah, I'm really content. I don't think the public, if I look at everybody in their tweets and their Facebook posts and the conversations at the golf club after a round, and subject turns around to the markets, and yeah, those markets are killing me. And the story about my dentist, I get done with a normal teeth cleaning and I wander out in the hall to pay my bill, comes charging down the hall, the head dentist, and is a lady. She said, Tom, I'm not happy with my portfolio, my retirement portfolio, and I'm not managing it. Why are you coming after me? And she says, this last Friday, I put in my annual contribution. It's Wednesday, and I've lost so much money in the last 3 days, including this morning, that my whole account is back to where it was before I put the annual contribution. I just wiped up my entire annual contribution in 3 days. So I politely asked, well, what are you doing with it? And who's managing it? Are you coming up with these ideas? We'll skip the name of the major brokerage firm everybody would recognize. I have a financial planner. He says to do this. We have some bonds, we have some stocks. And I said, and you have no risk protection. So when the stock and bond market goes down, you're going to go down. That was by design.
You mentioned that you had put some money with a money manager. I'm not prying on names, but I want you to clarify because people need to be aware that you're not doing that because you don't know how to do it yourself. You're just at a certain station in life where it's like, hey, I'd like to enjoy life. Yes, I like to trade, but I've got somebody I believe in. I understand their philosophy. I understand their method. I understand what they're doing every day. I'll let them do it for me because they're a younger shop than me. And I think that's where you were going with that.
Yeah, for my portfolio, I have a little money at Standpoint, which I'm the chairman of the board. I've known Eric Crittenden forever. I think you've interviewed him somewhere along the way. He's a brilliant young kid. He could be my son. He's getting a little older these days. His beard's getting a little gray.
Hold on, he's got to be in his 40s or early 50s. You can't be calling him a kid still. That's not fair.
I'm a month away from 70.
Did you call yourself a kid when you were 45?
Well, compared to the 70-year-old, I mean, he could have been my son. I think he's 49 or 50 right now, something like that. Eric's a sharp kid, and I get to watch from a distance as a chairman of the board. And I have the pleasure of running quarterly board meetings, which lately, because of the success of Standpoint, have always been a lot of fun to run. I just felt like things like my IRA. IRAs, if I trade them myself with the actual futures contracts, my broker has told me that they'll do it because of who I am and I know what I'm doing and everything, but they'll triple my margin because they want to protect themselves. They can't go inside an IRA and extract more money like they could from me personally in my personal account. You start looking at triple margins and all that. It's just easy to pick up a chunk of the IRA and go buy a mutual fund, which is what Standpoint is, BLNDX.
Let me take it back to your dentist, though, because the dentist story, I think we can get a lot deeper here because that's just the surface level of her experience in the immediate short term. And I'll be curious to see where you like to take this back to, but I'll give my quick rundown. I can say, okay, we go off the gold standard. We have the 73, 74 bear market. We then have the inflation run up in the 70s. We have Volcker jacking rates up to kill inflation in the early 80s. We get the 87 stock crash, the Greenspan put. Then we get the dot-com bubble. We get the dot-com bubble crashing. They jack rates down again. They create the big short bubble. They jack rates down again. We get the current bubble. Is there a starting point for all of this? It just feels like that the system is playing with people. And the people don't realize they're being played with until one of these bubbles bursts in any given generation. Give me your feeling on this. It's a very deep thing, I think, that what's been happening for decades.
It has. I think the Fed's done a terrible job. I mean, they're so late this time. And they talk about trying to do a soft landing. My God, they've pushed it so far. I don't think they can pull that off anymore. They just don't seem to be able to have common sense. I think a lot of investors, maybe particularly the dentists of the world and the doctors and the people running businesses, they're very busy. They're already working 9, 10-hour days. They just don't have time to sit there, pull up a quote screen and go through 60 positions like I do and do it quickly and efficiently because I know what I'm looking at and I have it all pre-programmed on, okay, this strategy, this is what I'm looking for. I got to look at those indicators. And if I have to move my order, I move it. If I don't, I leave it alone and I move on to the next item. And it takes me somewhere between 40 minutes to 50 minutes or something like that to get through the daily work. These people do not have that 1 hour a day to spare. And they don't seem to learn from history. Like you said, you've just mentioned and ripped off about what, 9 bear markets probably in the last 4 decades, something like that. Bear markets happen. Do you have a plan for one? The vast majority of the people out there just don't seem to have a plan. They think you go up, and when it goes down, you just hold on for dear life and then until it goes up again. That's their plan. And that's not much of a plan.
An interesting point right now, too, is while we're probably technically in a bear market on many of the equities, unlike, let's say, '02, where they brought rates down to create a bubble, or '09, where they brought rates down to create a bubble, now they've got inflation. It's a different scenario, isn't it?
Yeah. The Fed's backed into a corner because on the one side, you got interest rates. You don't have that great of employment numbers, despite what you hear out of Washington. I don't see what they're looking at. Not as much participation. There's still a lot of jobs being offered and not being filled, and people are having a hard time. You go out to half the restaurants around here and you get apologies in the front door. We're a little short staffed. It might take a little longer for your order tonight. Just be patient. We promise we'll get to you. And all sorts of excuses on supply chain problems and can't find enough people. And yet it's not extraordinarily low unemployment numbers. I think the economy is in a recession as far as I'm concerned. Whether officially it is or not, we'll find out in a few weeks, I guess. The preliminary numbers indicate that it's a recession. It sure is acting and looking like one, but you're right. You got inflation at the same time. You got commodity prices. I mean, wheat has had this huge run up and then they're having run down, and unleaded gas was down some ridiculous amount today. At one point, it was down 9% plus on the face value of unleaded gas. That's crazy. For the commodity traders out there trading futures and all that, like I do, and like Standpoint does, those are all good things because movement means potential for profit. It also means potential for risk. But if you have a plan and you can attack that risk, which I think is the proper mental state to have, not defend against it, but to attack it, go on offense instead of passively just trying to sit back and hope it doesn't visit you or try to come up with some way of avoiding the risk. Attacking it means you really have tried to identify it and do something about it. And it's much more empowering mentally, I think. I've attacked risks a number of different ways with what I do with my portfolio. They've all worked to a greater or lesser extent. I'm sitting here basically sort of unchanged across everything, and people are down 20, 30% in their stock portfolios and wondering what hit them.
One thing that we should point out, and we've done this over many podcasts over many years, is that while you might offer, and I generally concur with just about everything you say about the economy, the Fed, etc., you might have that perspective. You might have that view. You might offer a criticism of the Fed. But unlike a talking head on CNBC or Bloomberg or somebody on YouTube, you're not turning around and holding up a four-leaf clover or guessing. You've got like a system. So on one side of the ledger, we have Tom, who's a smart guy, who's got his understanding of economics, his understanding of the Fed, his understanding of how the world unfolds. On the other side of the ledger, when it comes to your trading, you have a rule set. And that rule set says you're going to do this regardless of what Tom thinks about the Fed taking an action. And that's a really important distinction that I think if you and I have this conversation, I feel like I always need to make that reminder. It's a subtle thing, but it's extremely important.
Tom, the economist, has fun predicting, just like everybody does, but Tom, the trader, is pretty mindless. I spend a lot of brain power creating a strategy, and I've got 9 of them that I'm running right now. As I've had more dollars keep coming into the portfolio and it gets larger, I like to try to spread it around to greater amounts of markets, greater amount of strategies, and greater amount of time periods. So I'm trading more short, medium, and long term, and I'm trading On a given day, could be as much as 60 positions. Right now, because of the bear market, I'm probably running closer to 40 positions. That's a lot of diversification. I call it extreme diversification. You got so many different strategies going on there that at any one time, a very short term strategy may actually go long while a long term strategy is still short, and they're sort of offsetting each other. All sorts of things dynamically are going on. What's weird about this whole thing is on the one side, the Tom the trader has been very content and very happy with what he's doing. Tom, the citizen of the US and citizen of the world, looking at how life might be ahead of time, is not real happy with the way things are going.
As I observe from 8,000 miles away, I'll be very blunt. I don't really see that this is not an objective view, but the things that bother me the most about observing my country, considering I've been in a country for the last decade that doesn't have these things anywhere close to the scale that America does, it just unnerves me. The two issues that are unnerving me the most, you're welcome to say, Michael, I don't want to comment, or Michael, I'll go there. But violence and deviancy are leaving America not civil. And it's really bothering me because civility is so important to have the fiber of society be civil. And it seems like it's slipping away.
Yeah, I mean, back in the 250 years ago, the Brits were always so civil that they put on red uniforms and lined up in front of the front line so that you could have target practice. That's how civil they were. And I think the world has been degrading America, where the rebel rousers revolted and formed their own country and all that. But it was very civil in the early days, and it's just gotten worse and worse and worse. And the stuff every night. Yesterday, some guy shoots up a 4th of July parade, and he's a complete wacko. So many people could have knew of him and warned the cops. Even the cops even went and visited his house and talked to him, and didn't do any good.
My parents are in their 80s. They live near Tyson's Corner Mall, which is 15 miles outside of DC. Tyson's had one of these gangland shootings recently, and everybody's running out of the mall. This used to be the suburbs. Is there a randomness to this where you take different actions? For example, if your wife goes out and she's alone, or she goes to the mall, something that you never would have thought about before, are there sides of you now where you start to be like, man, I got to be almost like a 25-year-old guy defending my lady? It feels crazy, Tom.
Both my wife and I have concealed weapons license, and I carry 100% of the time. And I never thought I would have to do stuff like that. And it's a pain in the butt to do it, but I do it. When we go into a restaurant, my wife now knows that her back is to the front door. I want to keep my eye on the front door. I'm watching people come into the restaurant and trying to decide, are they shifty? Are they looking around, just to get a jump on the situation?
You know what I find frustrating about bringing this up is there might be some people listening and they immediately try to classify me, or they classify you, or whatever. Whereas I really think from a basic risk management standpoint, we're just being objective. We're dealing with the situation as it comes down the pike. And to put one's head in the sand in 2022 and pretend that these things are not happening makes no sense.
Doesn't make any sense at all. And I hope and pray that I don't ever have to pull that thing out and use it. I just look at the reality. I think the reason we're in the mountains is it's a small community. We got less than 20,000 people here. A lot of people know each other. A lot of people are very armed in this small mountain town because there's a ton of hunting that goes on. So a lot of them have hunting weapons and all that. There's a lot of retired law enforcement here. We've got an airport that has a subdivision next to it where you can park your plane in your own hangar at your house and work on it. And then you go out your driveway and you connect into an extraordinarily wide road that the cars get out of your way, and you can taxi your plane to the end of the runway, hit a garage door opener, the end of the runway opens up, you get clearance and take off. You can imagine all of the military flags in front of every one of these homes. Oh, that guy's Marines. Oh, that guy's Air Force. Oh, that guy's the Coast Guard, and so on and so forth. We got our own Air Force here. It's kind of an interesting environment to be in. It's generally very conservative. on the political side of things. And there's 3 roads in and out, mountains around us everywhere else.
I think you're giving a great sales pitch.
It's a nice place and we love it up here in the summer. It does get 20 inches of snow a year and melts pretty quick, but it's a beautiful pine forest. I think on my Facebook background is a picture out the back deck with all the pine forests and the mountains. It's very peaceful. Mr. Serenity likes peace and quiet, and I have a beautiful office I can sit in, and it's cool. It's down in the lower level of the house, so kind of right next to the wine cellar, and everything's kind of cool. And so during the summertime, if it's getting up in the 90s or 100 or whatever, I'm just happy as a clam here.
What I love about how you describe so many things in your life is it's not just the risk management of trading. You've just described the risk management of life. I don't think you're sitting around having these huge worries or this or that. I think you're kind of looking at it saying, okay, this is the hand that I've been dealt, whether it's a trading hand, whether it's a life hand. This is the hand that I've been dealt. How can I objectively, from a risk management standpoint, deal with this situation and then live the most normal, peaceful, happy life that I want to live? It seems like such a smart way to go through life. And I'm not saying you're the only one that does this. I try to do it myself.
You are Mr. Intentional. You decide you want to live in Vietnam and you move all the way halfway across the world to live the lifestyle you want. So, yeah, I'd say you're quite a bit that way.
I really detest the violence. Somebody might say, well, hey, 1970, there was a lot of violence in Vietnam. Well, there was a lot of Americans in Vietnam then. So these days, it's just kind of a Buddhist, peaceful place. No place is perfect. Every place has its rough edges. But overall, I detest violence. I don't want to be around the risk of it. Hey, let me shift you back to something. This is going to get you into your early days and your analysis of the current days. So here you are. You're a guy that cuts your teeth on futures contracts. You know a lot more about Chicago exchanges than the average person. A lot of things have changed about Chicago exchanges since back in the day. You know, they've gone from the floor to electronic, all that fun stuff. But there's a liquidity issue. I interviewed Leo Malamed once for this podcast, and I've seen his books. And there's a liquidity issue built into futures contracts that goes back a long time. There's all kinds of safeguards built into futures contracts. It's not perfect. We've seen assorted brokers and things happen. I think the London exchange recently, things are not perfect, but it's pretty damn good. What I want you to contrast that with and give me your thoughts and perspectives. I've been watching seemingly on a daily basis, and I was unfamiliar with these operations, the crypto exchanges and banks on literally a daily basis with often billions under management that are just raising their hand and saying, oh, I'm sorry, we have locked your account. You cannot remove your money. You can't transfer your money. Stay tuned for an update. The numbers of exchanges and banks in the crypto world that have done this, off the chart. So I think it's an interesting contrast to look at your early upbringing, futures contracts till today, versus a lot of young people that otherwise maybe would have discovered futures contracts have now gotten stuck holding the bag in the crypto world by a system that's just nasty.
I tried to experiment with crypto. I was having such a difficult time even opening an account because my taxable side is in a normal family trust, which in the US is fairly common, especially with higher net worth individuals. It should be a piece of cake to open up a crypto account in a family trust name, but I gave up on one firm. Will go nameless. I just told them, I don't think you really want my account because you're coming back and asking for the same pieces of paper over and over again. And I've sent them to you already. And I don't think you even understand what type of business this is or what kind of account it is. I ended up out of frustration, and I guess happy that I did, saying to myself, well, Bitcoin and Ether have futures on the CME. I can go long, I can go short. You can't really short cryptos that easily. I guess you can at some places. I have no idea how that works. In the futures markets, it's just a standard open the contract up and close it down, and you got the exchanges standing behind it. So there's protection mechanisms. You can go two directions. I've had one losing trade, and I've been trading now for over a year probably now. One losing trade, tiny little bit. All the rest was trend following, huge winners.
Let me phrase it to you this way. Back in the day when you first were getting involved in futures contracts, was there a certain due diligence that you had to do personally to convince yourself, hey, if I put my assets here and I get gains or losses or whatever, I can get my assets out? Was there a certain due diligence you had to do?
I had to look at the firm that I was at, number one. Number two, I had to try to decide how does the exchange and all the broker dealer or futures commission merchants that are part of the exchange, along with operations back in those days, there wasn't an NFA, but that soon came in, but CFTC and all, how does the backing of the reserves and all of these broker dealers or futures commission merchants back each other so that if one goes under, what happens in that situation? And I had to also then go to the third level of my own account. How much margin do you need to carry a reasonably leveraged set of portfolios? And I decided, based on margins back in those days, that somewhere around 15%, no more than 20, for a fairly diversified futures portfolio was sufficient margin personally to carry it. That gave me 80% cash sitting in T-bills or something else to help protect it from a default situation. Because if you got a T-bill, it's not sitting in the credit balance for the broker. It's a securities position backed by the government. Yeah, there was layers, not only from the exchange level down to the FCM level, down to my own level.
Do you find it interesting? And I'm not sure how much you've paid attention to some of these headlines of the crypto exchanges and the crypto banks, Celsius and some of these others that have literally just shut their doors and said, you can't have your money back. I've never had that happen to me, but the feeling to have that happen, it's not a fun feeling, but it also brings me back to the point of the amount of trust that people put into a brand new system with no safeguards contrasted against the system that you were exposed to as a young man. It's quite a different story.
People don't seem to bother to do that due diligence, don't even ask those questions, don't even think about it. And they may have 100% of their money with one house. If I was going to do cryptos, and I still am working on trying to do a little bit, I guess to become experienced and to be able to answer people's questions, at least understand how the transactions occur and what the positions are. I'm not putting enough in it that they would ever get in my way financially. But when I look at the process of opening this stuff up and how restrictive it is to try to get it to open, and then once they do get it open, they've got 100% of their money. I remember doing the experimental thing and making an insignificant amount of my investments, and I'm still spreading across basically 3 different types of exposures to cryptos. I'm doing negligible amounts and diversifying it 3 ways, and a lot of people aren't diversifying at all. And they got 100% of everything in there. It's crazy.
There's another issue to this liquidity logjam right now with the banks and exchanges freezing assets. If you've got a system where, let's say since December, I think just about every piece of crypto, including Bitcoin, has come down 60 to 90%. And now you've got a situation where they're locking banks and locking exchanges with Bitcoin at approximately a $20,000 level. Of course, this is not a trend following perspective. It's just a question between 2 people trying to figure out a bad system. What in blazes happens when markets have collapsed that much in 6 months, and then you tell people whatever money you still have left, you can't get it back out right now? What in blazes happens the moment when they say, well, now you can take your money out?
And the reason this is all happening is if you've got clients at the exchange that you've allowed to do 2, 3, 4 to 1 leverage on their crypto trades, and the people in the market move so fast that they can't get out of that position, or the firm doesn't have the protection mechanisms in place to be able to bail them out and just close down their account for them because they were wrong and we're going to prevent the firm from being hurt. It turns out the traders themselves don't have enough money to come up and pay back all this debt and the leverage that they're taking on. So then it falls to the exchange. The exchange doesn't have enough to take on all of these people who are all leaning the same way. The exchange gets into trouble. And then they don't have the money to pay off the people who didn't take the leverage. So one of the keys I would always encourage people to do, and I'm certainly doing it myself, is to look for exchanges and people doing cryptos that are not allowing a whole bunch of leverage. If everybody has 0 leverage, within an exchange, you're never going to have an issue. It's going to be like watching paint dry.
I think a lot of young guys that maybe had a certain libertarian mindset, which I know you do, which I do, a lot of young guys coming of age, coming out of the 2008 crisis. This is where Bitcoin was starting to germinate. I think their rationale, hey, we don't trust you guys anymore. We want out of this. It's kind of a damned if you do and damned if you don't system, because in the sense, they have, if they got into Bitcoin early and they kind of took a lucky move, they've made a bundle of money. On the flip side now, we're seeing what can happen. We could very well see that their fear coming out of the 2008 crisis 14 years later could be playing out right now too. It's a really messy system we're in these days.
Why not look at each market? I know you do this, but if I'm trading, I think it's 28 futures and commodities markets, currency markets, precious metals, energies, all that stuff. I've got extreme diversification. They go in two directions. Energies have gone up a lot recently, but they also went negative during COVID. Oil prices went negative for one day there. Why not just accept the fact that markets go up and down and figure out a way to create a strategy to deal with it? It's not that hard. The people that got kicked in the teeth in 2008, it's again a story of not having a plan in place to deal with what you know is sooner or later going to happen anyway. You put yourself in harm's way, and you don't need to do that. As a trader, have a plan for an up market, have a plan for a down market, have a plan for a sideways market. Understand that markets are going to do all three of those things and know what to expect with your strategy in all those three different conditions. Then life is good and you can be Mr. Serenity, because nothing happens that's all that surprising anymore. But for people to rush away from stocks and go into cryptos just because stocks kicked them in the teeth is kind of an example of somebody saying, well, I didn't handle that well, so why don't I learn from it, handle the next one better? No, they just say, I'm done with it.
And if you think about, or if the audience thinks about this year, okay, Mike and Tom are having this conversation. Tom's giving these views and perspectives, not unlike the many events that I've put in my book, Trend Following. The first 4 or 5 months of 2022 are historic for trend following performance. Historic, just off the hook. When this happens, though, what's always interesting is that trend following will prove itself in one of these moments, and then the naysayers. So I caught a clip. Katie Kamensky, who's been on this podcast, a trend following lady, she was being interviewed on some Bloomberg or CNBC, one of these voices, I forget the guy's name, he's been around for like 4 decades saying the same nonsense. But she was talking about what I just said, the performance of 2022. This guy, and I'm not sure whether he was doing this because he didn't know or he was just being disingenuous. He's like, oh, yeah, it's going to be like a long-term capital management. How much leverage do you got? Literally a complete disconnect. Again, whether he did it on purpose or he doesn't know, but so interesting because you know that when long-term capital management went under, who made money? Trend following traders. It's interesting that I think the lifestyle, the mindset that Tom has, it's never going to be accepted.
That being said, I got 43,000 followers on Twitter that seem to hang on every word that I write. I've helped a lot of people out there. I know that a lot of people like reading my stuff, but if people could just pick up bits and pieces, I'm not saying everybody even should try to trade like Michael or Tom trades, because I'm more of a believer than most, I would say, that because my situation, my skills, talents, computer expertise, capital, size of capital I'm trading, the amount of time, because I'm retired, that I can address trading my own portfolio is different from everybody else in the world. There's no way that everybody else in the world should try to trade like Tom. They should try to learn from Tom and Michael and others that have some good ideas, perhaps, but you've got to still get it down to tailoring it to yourself. It's the only way you're going to be able to successfully execute it flawlessly every day. If you're doing something that somebody else created and it doesn't fit you, you're going to have problems. You're going to make mistakes. You're not going to feel comfortable. Your mental side's screwed up. It's not the sweet spot. I like to try to help educate people, but I try to constantly implore them to create their own strategy. The trend following covers, as you know, a wide range of indicators. And I know you've got your flagship program that you have. That's one trend following strategy, sort of. There's probably 10,000 others out there too. Conservatively, there's a lot of different ways that you can create what you create. You can do it longer term, you can do it shorter term, you can do it medium term, you can trade futures with it, you could trade ETFs with it. There's just a lot of different things you can do with it.
If we pick that classic trend following mindset, that classic trend following strategy, and I still recall going through the performance data of people like yourself and others back in the day, that interesting correlation. Now, of course, there can be different trend following strategies in that correlation, but when trend following works, trend followers make money in the same months. They lose money in the same months often, generally speaking. All those qualifications.
The big guys tend to because they're all in the same instruments. So the instruments make big moves, they make big money. If instruments do not make big moves, they lose money.
Let me shift you to something that's really interesting that's been happening to me. And I've heard other people say this. Have you noticed? I think you're going to say yes. The Indian subcontinent. Have you noticed how many people in India have got an interest in trend following? Watch out, because I'm telling you what, they're coming with gusto to learn, aren't they?
I've given 2 keynote addresses in India, virtually, obviously. I really don't love getting on a plane, and especially don't want to get one and go that far away from home. But virtually, it's pretty easy for me to help out people. And of course, English, it was a British colony back in the day, so the English is fairly common there. There is, I'd say, a very large percentage of people that visit the enjoytheride.world website that I run. It has all the educational books, and I have a link to your trend following book, for instance, links to some of the interviews that you've done with me in the past and other people have done with me. I get a Google Analytics on where people come from IP address wise. There's a good percentage from India.
For me, I'm not sure when it started. I'd have to go look through the analytics data too, but I'd say sometime in the last 2 to 3 years, maybe last 4 or 5 years, just the interest. Amazing. Amazing. By the way, we were texting the other day. You said something that you liked the comedy show. You didn't use the word comedy show, but you liked the comedy show between Larry Hyde and myself.
I was sitting here doing some work at the computer the other day, and one of your classic emails comes through and said, "Hey, I got a hold of Larry Hyde again." And I said, "Oh, cool. I'm just going to be doing this nonsense busy work on the computer. I'm going to put that in my earphones and just listen to the interview while I'm working." I was just laughing. He is a riot. He inspired me with all my position sizing. And then I wrote a book about it now. It all started out with Larry. Mint was who we looked up to. And I was just coming into the business as a CTA, and everybody looks up at Mint at $1 billion. And wow, these guys are gods. I learned something from his chapter in Market Wizards that was a profound mathematical opening of my mind to a whole new set of.
He's losing all filter, which I love. There's no filter anymore.
There's a few 4-letter words in there. That's Larry.
I mean, I know you're a pretty pragmatic guy. You're pretty serene in control. Do you think your filter will go away more and more in the next couple of years?
I don't see the need. I'm not one for using 4-letter words a lot. I'm very happily married. I enjoy my life with Brenda. I don't find the need to use a lot of 4-letter words. It's just the way I was raised. I don't know that I'll ever change that. I may go senile.
I doubt that. My audience is already sitting there saying, Mike, Tom just told you need to stop using all those bad words.
No, I don't care. People should talk the way they want to talk.
Sometimes in the last 10 years, I'm sure I've used too many. I think sometimes for effect, okay, or if it's passion, if I do it, it's subconscious. I don't think about it. Maybe this is just the rough and tumble sports upbringing that I had, that you just can't lose some of that. From what I've heard, Tiger Woods did quite a bit of swearing in his heydays.
Oh, yeah. And you'll hear every now and again, CBS or one of the big network channels will not have the 5-minute delay, hit the button properly or whatever. And you'll hear somebody teeing off and it's headed way out of bounds. And you hear the 4-letter word is uttered or shouted. and they can't cover it up. And then the announcer comes in and says, "Ladies and gentlemen, we apologize for."
I think I saw you commented when I said something about the new golf tour. Somebody with a deep pocket shows up and says, the old system's not working so good. And the guys say, hey, we're going to try the new system.
And I'll tell you what, my wife and I have come to the conclusion. Brenda and I watched the first one in England, and it was pretty confusing. And it was on YouTube, so no commercials. That was nice. You could fast forward to push through if you want to go closer to the end of the tournament or whatever. Because everybody's going out there at the same exact time, and it's a shotgun. So there's somebody on 1, 2, 3, 4, 5, all the way up through 18, and everything's happening simultaneously. There's a lot going on. It's kind of hard at first to follow. But then what you end up with, we watched the second tournament just now that was in Portland this last weekend. And we're kind of old pros now. You know, we know how the teams are set up, and we know the 2 out of the 3 scores the first 2 days count, and 3 out of the 4 team scores count on the third day. And it's third day, it's all over. And here's the money breakdowns. And we really enjoyed watching the Portland tournament. It was very exciting. The choice on the PGA Tour was the John Deere. I don't know how many people watched the John Deere. A guy named JT Poston, who's not exactly a household name in the industry, went wire to wire and won the thing. The top 5 on the leaderboard were not exactly the Tiger Woods, Phil Mickelson, Brooks Koepka, those types of guys. There was actually a pretty good competitive situation where Liv actually had a fun tournament to watch. We didn't even watch a single bit of the Iowa tournament.
I'm not a huge golf fan, but I hear enough in the sense that I've heard so many of the PGA players say over the years that their voices weren't heard or there wasn't a way to participate in decision making and whatnot. So when an upstart shows up with a big bag of money, and that's what the program is all about, a big bag of money, I love that kind of competition. I love seeing that.
Think about this. We'll just create a weird example. Dustin Johnson lives down in, I think, Jupiter, Florida, on the East Coast there, close to Tiger Woods and all those guys. Let's say the Honda Classic next year is going to be at West Palm Beach. He might say, I kind of like that tournament. I feel like I'm playing at home. I'm going to go ahead and try to sign that up. But the commissioner has said, no, you are expelled from the PGA Tour. But he was supposed to be an independent contractor with the PGA Tour. Now, legally, let's think about this. If Dustin goes there and say he talks Brooks, who also lives in Jupiter, and a couple of the other guys that live in Jupiter, and they all just decide to go over, hey, let's play the Honda this week. And they're all fairly highly ranked in the world players, but they've been expelled from the PGA Tour. Do you think a class action suit is going to be coming right down the pike? And I think PGA Tour is going to have a hard time justifying banning them for life as independent contractors. That's going to be very interesting. And I think that's on the way.
A contrast to this, my nephew is playing college football. He's starting his freshman year. Skinny guy, 5'11", 170, but fast as lightning. Some of the guys in his conference, quarterback for University of Miami. My nephew's at the University of Virginia, but the quarterback for the University of Miami, I think he's getting paid $12 million as an 18-year-old quarterback. Now, what's really interesting about this is we make the contrast between the new Saudi Arabia League and the PGA. I look at college football now. If you start to get kids that are coming into college football getting paid almost as well as the NFL, you start to wonder, well, some people in college football say, well, why are we letting these kids leave our arms at age 22 to go to the NFL? Why don't we keep all this loyalty money with the University of Arizona, Texas A&M, LSU? It seems like all of the sports world is ripe for these kinds of breaking things apart with new competition.
I don't know what JT Poston won at John Deere Classic, but they've been coming in high 1 millions, like 1,000,008, 2 million roughly this year. Most of the purses are in that ballpark. That's first place. Dustin Johnson and a guy named Patrick Reed tied for third and fourth, basically. They were both on the same team, and that team won. So coming in third and fourth, they made about $1.1 million. Because their team won, they picked up another $750,000, which, if you add that up, is equivalent to winning the John Deere Classic. So instead of winning, just coming in the top 3 or 4, which these guys are good enough to be up there in the top 10, the last place guy in the tournament took home 120,000, which still pays for his net jets home. He can fly private when you're pulling down 120,000 from the last place.
I love any situation where somebody with skill, I don't care if it's sports or whatever, if somebody with some skill and there's an audience that wants to pay them, I say go for it. There's not a bone in my body where I would ever be like some jealousy or you must do this because we feel this or whatever. No, 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 no. The individual, as you say, the contractor, if the contractor has the skill and somebody wants to pay him the money, I say round of applause, bring it on.
That's capitalism 101. I don't understand why anybody could be anti people making money. If you look at what happens with that money, doesn't it go back into the economy somehow? It either goes back into capital formation or it gets spent. Goods are bought in the stores and that gets multiplied and makes the world go around. And Dustin Johnson can only eat so much food. I mean, he's got enough money to be able to live his life. That excess money goes off into all sorts of places to help spur the economy. I don't see any downside. The big downside tends to be is if government gets their hands on some of it, then it tends to go into the black hole and get misused and very inefficient use of capital.
I love the idea that in a society, there are people with higher skill than myself that get paid a lot more money. Now, some people might say, well, that sounds crazy, but I love it because it sets the bar. It gives you aspiration. Now, maybe I will not be going down the path of being the pro golfer, but it doesn't matter. There's something else I can do. There's something else you can do. Anybody can do. So I love these aspirational high bars. On the flip side, clearly, I think in modern day, too many people have got that system messed up in their head where jealousy is too much of a factor, when jealousy is just such a defeating factor.
Jealousy is absolutely pointless. It somehow says that I'm not happy with who I am. I'm not taking responsibility for who I am. This guy was lucky, or this guy, I aspire to be him. But what's wrong with being you? There's lots of traders out there, tons and tons of traders that I grew up with in the industry. I retired in 2003. I could have kept going, and who knows, I'm managing $1 billion now or whatever. And I would have a higher net worth than I do today. And it wouldn't change a darn thing in my life, except I would have missed out on all these last 18, 19 years of happy retirement with a smile on my face. I really have enjoyed retirement. It was a personal decision I made. It was the right one for me. I could have had a lot higher net worth, but it wouldn't change anything. I'm not a guy who wants to have a house in Vietnam and a house in the United States, and let's put one in the Bahamas too, and maybe one more over in Gibraltar or whatever.
That sounds like a lot of work.
Yeah, it is. I mean, just having 2 houses within 90 minutes of each other is a lot of work. And I'm seeing right now, being down to 1 house and having sold the other one, I'm saving like $10,000 a year just having 1 house, because I don't have to pay taxes. I don't have to pay electricity or the garbage or the water or all this other stuff and fix things. Life's a lot easier. Having a lot of possessions is not the road to success and happiness in my mind. Less is more.
I'd have to find the email, and I'll leave you with this one. Somebody texted me recently, and they must have gone through your historical track record, and they decided in their hypothetical future mind, it was not enough for them. And they were telling me, well, I need to be making more like 200% a year.
Yeah, okay. Enjoy that ride. I'm retired. I don't need to make 200% to have a nice lifestyle. What I need to make sure I don't do is blow up to the point where I got to go figure out how to make money again or something. I'm enjoying retirement. I want to stay retired.
Well, Tom, cool stuff. I've kept you again. Time flies with you. It's always easy to talk. I appreciate that.
It's so easy. I love your interviews. I'll do them anytime. You just give me a call or send an email.
The thing is when you do this, I've done so many episodes, you do it, you start to lose track of time a little bit. And you're kind of like, well, hold on. I've not talked to Tom for a while.
Well, you can call anytime. You're so, well organized. I get on some interviews and they're scrambling to try to set up the mic and they're trying to get their camera right. And the lighting is screwed up and the internet's freezing up their screen and all sorts of weird things. You have this down after doing like close to 1,100 of these things or whatever. You have figured out how to do it, I think.
Where can we send people, Tom? The Enjoy the Ride website?
I'm on almost all the social media one way or the other. Twitter is the largest, and that's at Basso_Tom. And be careful because there's about 6 or 7 imposters floating around that I seem to try to block and report, but never quite sure whether they've disappeared or not. Of course, enjoytheride.world is my website, and it's got a lot of educational material for traders. A lot of it's for free. Some of it you can buy certain books or recordings. You can always go to standpointfunds.com and see what I'm doing as a chairman of the board. My picture is about the only thing that I'm contributing there pretty much, although I'm kind of the grandfather that gives them fatherly advice when situations come up.
I should also interject also for the audience, the win-win proposition for Mike and Tom. Go pick up the book, Trend Following Mindset, which is about Tom.
It's a reasonable book.
I'm not letting you get in charge of marketing our book. It's a reasonable book. That's not exciting enough.
Michael's got half of the book because those are the questions, and Tom's got the other half of the book, which are the answers. That was, though, a great project for us to do during COVID. There wasn't a whole lot else to do, and that was a lot of fun.
It might be my favorite book cover of the ones that I've done, really. It's really cool. It's simple, but it's just fun. I give the publisher credit for that. Usually publishers come up with book covers that look like first graders did it with crowns, but they did really well in this one.
Brenda takes great pride in the foreword. She continues to say that that is her personal favorite part of the book. And I have to say, every time I read it, I break out laughing. She nails me so well. It is hilarious. We have a good time with that too. You decided the subtitle, somehow it was The Legendary Tom Basso or something. So she goes around introducing me as, this is my legendary husband.
You just have to pull up your phone and show your friends the cover. You're not saying it. Some guy named Mike said it. Tom, go have a wonderful evening.
And you have a wonderful day in Vietnam.
Tom, take care, man. I appreciate it.
All right. See you, Michael.
My guest today is Tom Basso. This is Tom's. I have no earthly idea how many times Tom has appeared on this podcast. A lot. He is one of my favorite guests by you, the audience out there. Maybe the most favorite. Tom happens to have a new book out that you should check out called The All-Weather Trader, Mr. Serenity's Thoughts on Trading Come Rain or Shine. Our conversation today is all over the map, which, of course, is the way that I like it. And Tom is a good sport, and Tom plays along, and Tom goes with the flow. Without any further build-up from me, without any further delay, let's jump right into my conversation today with Tom Basso. I hope you enjoy. Let's jump right in, Tom. I was thinking before I got on this call, I don't think I can take responsibility for this. Maybe just a small percentage. Obviously, it's been something building in you. Can we officially stop talking about Tom being retired?
You and everybody else keeps telling me that. I have this dream that the book will come out. It will be well received and everything will be great. I'll do a few interviews here and there. I'm working on this trading platform. It's going to be named Sim Trader, we think. It's well along. I'm almost totally automated on it now, alpha testing it. Those two projects have taken up a tremendous amount of my time. Some days it doesn't feel like I'm very retired. I have this hope that maybe in the coming year we get the house remodeled. I have a beautiful office in this new house. It puts everything I've had up to now to shame, and it's basically a sound studio. I'll have the automation with SimTrader. Maybe I can play a little more golf.
I'll make the argument. I don't think Tom wants to be retired. Maybe at some point in time, Tom thought he wanted to be retired, but not now. I'll share something with you that just happened on a conversation. I just had a chance to interview the founder of Atari, the video game manufacturer.
I saw that.
He's 80 years old. I said something to him about this idea of retiring. He's like, I'm not retiring. He goes, I've done the homework. He goes, the moment you retire, you die 7 years faster or 7 years earlier. I'm never retiring.
Well, here's the description that I would put forth, or the definition I would put forth. Retirement to me is being able to be free to do whatever you want to do. It doesn't mean you have to sit around and watch television all day. It could be golf, it could be working out, it could be helping a trader get started, it could be writing a Substack piece because I've got something on my mind and I want to get it off my chest. Those are all potential retirement things. I don't have to be there on Monday morning for a Zoom call with 20 traders because I'm charging them to train them, running some kind of a podcast that I need to do 2 per week, and I have advertisers depending on it. I'm selling product off of it or whatever. I mean, that is less than retirement to me. For me, today I did 3 contractor meetings at the new house. I did my work. In the morning, it was Spanish lessons and some emails. Then I put out this public relations thing this morning. We're 1 week out from launch. It had 42,000 views, 260 something likes, 8 retweets, and 1 quote was obtained from what I said, just from doing that one public relations piece for the book. Tomorrow is completely different, except for running my daily run. There's nothing tomorrow that looks remotely like what I did today, including I don't have an interview tomorrow, and I'm doing one right now.
I'm in the exact same process. I do try to do an interview every week or 2 a week and then not do one for a week or something like that. To me, it's kind of like being so far away from the States, which I enjoy. Jumping in and doing an interview is just fun. I get to choose who I want. And I can't tell you, Tom, how many times I'm pitched these days by people that their backgrounds look okay on paper. Maybe it's an interesting subject. I can't get the enthusiasm. I only choose the people that I think I'm going to enjoy. I can't do it just to do it for the sake of doing it. It's got to be something interesting to me.
People that fail in retirement typically take that image of retirement of, I don't have to work anymore. So I'm going to watch television. I'm going to drink every night of the week. I don't have to work out as much. They degrade their bodies and minds through lack of being able to do anything. I think when you have a career, I mean, when I was a money manager, from Sunday night, I was getting ready for Monday morning. It went all the way through Friday afternoon, and I was very disciplined and very on schedule and showed up at the same time every day and met my clients on the planes. And that was definitely an occupation. I did not have control over my schedule as much as I would have liked. And even despite the fact that I was making a lot of money and running this firm and had employees, there's a certain routine that you feel obligated to put forth. I don't anymore. I'm very busy. There's no doubt in anybody's mind that I'm busy. I'm everywhere lately. That's not going to be that way all the time. I'd like it to get down to just a little bit steadier pace. It's a little bit crazy right now.
So I just noticed that you worked with the company Scribe to do your new book.
Yeah.
Did you realize I'd interviewed the guy that started that company twice?
Oh, he's an interesting guy. I got to talk to him once. Very, very interesting. I could understand why you would enjoy that.
We're talking about Tucker Max you had a chance to speak with?
Exactly.
Tucker is probably right there in the same headspace that you and I have talked about many times. He's a self-sufficient kind of guy. When I met him for the first time, my gosh, I don't know how long ago, over a decade ago, it was probably a little heavier and wasn't working out. And I was with another guy who was a lot heavier and wasn't working out. Tucker didn't even know us. And he just looked at us. He's like, what are you two guys doing? Go get in shape. What are you doing?
I can see him saying that.
It was great. I think it's an awesome option because I can think of all the pitfalls that I fell into learning how to write books and whatnot. I think they probably do a great job of bringing people in that don't want to learn the years and years of dealing with the publishing industry and helping them to just help a guy like you that knows what you want to say, get your book out there. I think it's a great service.
Correct. That's the thing is they basically did a little of suggestions and editing. Tom, this chapter could use an example here or something like that. But basically, I wrote the book. They are coming into play big time on the getting the Kindle version ready and getting page ready for Amazon and combining together. I even have something strange because back in the old days, I used to go by Thomas F. Basso when I was working, but now everybody knows me as Tom Basso. What ends up happening is now they have to come up with 2 pages and combine them together so all my books will be in one place. All this bureaucratic nonsense. They get to do all that for me for a price. And I get to own the rights to the book. Based on the demand I'm seeing, it's going to be a big seller on the first day, I think. There's a lot of people anxious to read it.
I want to take you into some more current events stuff, and I want to pick your mind because you've got a lot of experience going back in time. I have to share something. I think this is on page 14 of the introduction. I about spit out a drink laughing from something in here because it kind of comes out of nowhere. You talk about the most of your listeners, followers are guys. And so you say that in your book, you're going to use the term he, and you're not being offensive. It's just you're using the term he. You say, assume it to be the person doing the trading is male, female, or any of the other genders that are out there these days. If I would have had something in my mouth, I would have spit it across the floor laughing. I was like, Tom is just sliding that in there. Wow.
Basically, I'm trying to keep the book extremely casual, like it's just Tom talking to you over a brew or whatever. Not anything stilted. I didn't want to have a book that was chapters and chapters on statistical analysis, asymptotic curves and non-normal curves and everything else. I just wanted to take a person that started out like I did back in the 70s, take them through my trading life a little bit and all the different reasons why I came to these epiphanies.
This is the American culture right now. This is a Tom Basso fight back against the culture line.
Well, it is. And I refused to go through the whole book. And every time I said he, say he or she, or he, she, them, or whatever else.
That's not the part I'm talking about of any of the other genders out there these days.
Well, there's a ton of them, I guess. Personally, I find it pretty easy. As Ben Carson said, go to the bathroom and look down. That's your gender. I mean,
we're off to a hell of a start today. Let me shift it into current events. I know for as many conversations as we've had, you've always been a guy that's talked about strains in the system you might see. The idea that uncertainty exists, chaos can happen, a black swan could swim in. You never make a prediction. You never say something is going to happen tomorrow. You have enough experience that you know that things are stretched, and they've been stretched for a long time, perhaps decades, some people could argue. Here we are now. We have a situation where you can tell me if you've ever felt these feelings before. We have a situation now where people really have to be worried, or it feels like they have to be worried, whether that's true or not, worried about their deposits in the bank. Will their deposits be there? What has been your feeling, your observations? We're not even getting into talking about how you would trade, but just your observations politically, culturally, society. What's been happening in the last few weeks as we talk here mid to late March of 2023?
I think several banks that have collapsed that have had capital, but they've invested that capital in things like a little bit more intermediate or longer term bonds that have a maturity curve and that have a duration risk, and then they don't manage that risk. That is insane. If I was on the board of directors of any of those places, I'd be screaming at them, what happens if interest rates go up 5%, which is what they've done? Your bonds are going to get killed. You're going to be out of capital. I'd just be screaming at people, or I'd refuse to be on the board if they didn't listen to me. These people have no risk management. They were paying attention to how woke they were, one of the guys was running seminars on whatever it was, critical race theory. I can't even remember, equality. And this is one of the bigger managers of the thing. Insane. You should be pounding. Apparently, they didn't have a risk manager for the last 9 months. You got to be kidding me.
Let me push back and ask you to take it to another level, perhaps. You point out no risk management. Maybe they did have risk management. Maybe we've reached a point in society where they just said to themselves, we're just going to play this game how we're playing it, and we're too big. We know we're too big. Our risk management is we'll be bailed out because we're too big. It almost seems like there was a certain arrogance there. And if this kind of arrogance, and I want you to expand on this, it seems like if I go back and look at the Chicago Futures Exchanges, regardless of the political stripe, it was always like, hey, it's a zero-sum game. We have to make sure everything's balanced out. You come into the game. If you lose, okay. If you win, okay. But it's a fair game. There was a certain amount of morality, you might say, even. But it seems like if this Silicon Valley Bank, for example, had no risk management and they played the game that they were playing, and clearly, let's assume that there were some high IQ people there, it really seems like they played the game knowing full well that their risk management was a bailout.
I don't know if they were that smart. I got to believe they've gone through semi-hell for the last weeks. Not sure they would want to bring that on themselves. I think their focus is just off. I mean, people in banks are not focusing on banking. They're focusing on all this other garbage. And to me, the problem with that is then the function of the bank fails. And even if they have the most altruistic goals to distract their institution into all sorts of different things, they don't get to do it anymore because the bank is no longer going to be there. In the end, they fail. It's like you yourself. If somebody is so helping everybody that they don't take care of themselves, there's not going to be any help to anybody eventually, because if you're not taking care of yourself, you're going to disappear. And then these people will have nobody helping them. I think you got to do your core business. There's a lot of examples here. I mean, the banks that are getting off into crypto land and lending money, and cryptos are some of the most volatile instruments in my 60 instruments that I own probably today. If I look at my average true range of cryptos, gosh, 2,000 points on Bitcoin a day or some ridiculous number. Despite that, we want to loan money to people who want to trade in those markets. Does that make any sense? You're adding tremendous volatility and then you're adding more danger. How are you going to manage that? I don't get it.
If I look at Silicon Valley Bank, they get this duration thing wrong. Okay, they make a mistake. And then the argument from all their depositors is, well, hey, it's not our fault that our bank made these decisions to buy these bonds at the wrong time, yada, yada. How can a system work? And these are bailouts. How can a system work? I saw Yellen came out and said recently, I think it was the senator from Oklahoma who asked her point blank, if our regional Oklahoma banks go under, will they get the same treatment as Silicon Valley Bank? Janet Yellen told the senator from Oklahoma, well, only if they're, quote, systemic risk. I thought to myself, wow, that's the most subjective political stuff. Because essentially your life, my life, what we're talking about the markets, this is about math. This is about math. And you were talking about that with why did they not hedge their positions? This is about math. And the moment that math becomes personal and political and subjective and there's no objectivity, where are we left, Tom?
We're left in a quagmire. That's why I'm a bit pessimistic going forward for things like the economy, things like personal freedoms and rights. They're getting trampled on left and right the last 3 years, ever since COVID. It's been just a tremendous decline of personal freedoms. I mean, I can even understand why you head offshore, have the freedoms that you enjoy, because you probably do enjoy some. And I get nervous every day when I see what's happening, and I try to think of how do I plan my future. And it's very difficult when things are eroding like this. I mean, for starters, do you even know whether you're going to be able to buy food 6 months from now? It's that bad. So you start thinking, well, maybe I ought to put away a couple cans of beans or rice or something in the pantry just in case, because you're going to want to have something to eat. You're going to get hungry. How about water? How about infrastructure failing? How about crime? It seems like the big cities are just ignoring crime, turning the criminals right back on the streets. In Arizona here, you got the southern border is completely non-existent almost. The population of illegals throughout the state is just unbelievable, and that puts a burden on the fiscal status of the state of Arizona and New Mexico and Texas, and even some of the other states are getting thousands and thousands of illegals that are putting burden on their social systems and health systems, hospitals and schools. How long can you do that before the system collapses?
In the last few weeks, did you have any feeling that, okay, I need to be worried about my deposits in some of my banks? Did that feeling cross your mind?
No, it didn't. In my case, I'm dealing with two different banks. One is the 10th largest bank in the United States. The other one doesn't really have any kind of an investment program. It's very much a pass-through bank that is an accommodation for the brokerage firm that it's associated with. And I really don't keep a lot of money in banks. I have all my money in various trading accounts. In the trading accounts, I might have some T-bills or something just to deal with idle cash. But pretty much, as you could tell when you read the book, I've gotten so far flung with having futures programs overlaying on top of equity programs that I'm pretty utilizing most of my capital in multiple ways sometimes, and frequently I'm on margin. But I'm doing that for diversification and risk reduction. So it's a kind of an aggressive way of being conservative.
Let me rephrase it in the sense you have a lot of people that come to know about you, come to follow you. Maybe they're beginners. They could be beginners at age 20. They could be beginners at age 60, or their experience level could be all over the map. And they don't yet have that type of sophistication that you just laid out. What about for those types of folks in the last 2 weeks? Would you have some sense if I was in their position, I would be a little alarmed as to what's been happening?
It really depends on how much loss you can take gracefully, say, in life. If you were to have, say, 50,000 and it was all the money that you had saved in your entire life, I'd be very nervous keeping it at just a single bank or any institution, really. If you could break that apart into, say, two or three so that any one of those going down wouldn't cause you to miss a stride, yeah, it'd be a bad day and you would not be very happy and you'd like to get your money back. You could keep on going. You could keep running your life. You could keep buying groceries, making your payments. Then I'd be a little more comfortable. I think you got to dial it in for each situation differently.
Before we move on, I want to take it back to something you brought up. And I want to see if I can keep this topic moving in a way that it's going to be hard. Some people will want to put us in a slot no matter what. I don't think what I'm going to bring up, though, is really about partisanship. You brought up crime. I was back in America half of December, half of January. I walked into a CVS with a friend. We came back out. There were 6 cop cars in the parking lot. We found out a day later there had been a shooting in the 10 minutes we had been inside. 10 minutes earlier, we could have been in the middle of Crossfire, a hometown that I grew up in. I traveled while I was back in the States. I traveled around the Capitol Beltway several times across Virginia, Maryland. Multiple times on this highway, I'm going 70, people coming up behind me at 100 miles an hour at least, getting right up to my bumper and swerving around me. This happens so much, and I'd not been in the area. I felt like this must be a game. And then just the overall feeling around a lot of young people and whatnot. I don't understand the crime thing. I guess, having been in Asia now for 10 years, I've never seen any violence. I'm starting to lose touch with why it's even tolerated. Why it seems like that if you and I would have been a teenager when we were growing up in America, if we would have pounded on a cop car or we would have talked back or whatever, we were going to have the cuffs put on us and we were being taken down. If we were stealing something or messing up a drugstore or a supermarket or a 7-Eleven, it seems like something's happened. You're going to give me a very pragmatic answer about it. I don't understand what's happening.
I think it's a lack of parenting, the tremendous amount of broken marriages. I mean, what, more than 50% of marriages fail in the United States, I think is the latest statistic I saw. I think that combined, so you got multiple parent situations that are very messed up. They don't have a father figure, maybe, or they don't have a mother figure. The schools, when you and I were growing up, if you screwed up, you got a ruler on your hands, or you got a little table tennis paddle to your butt back in the really old days. You definitely got a call to your parents, and they came and picked you up, and then they gave it to you again. Kind of learned your lessons that I guess that's antisocial behavior, or I shouldn't be doing that, or whatever. Nowadays, you can do whatever you want, and they laugh at the teachers trying to suggest anything otherwise. That starts the process when they're young, and then you get to teenage years, the crimes start, and the DAs in these big cities don't even want to prosecute. These people just keep saying, oh, well, I can do that and get away with it. I can do it again and get away with it again. And it just degrades little by little. The people that are being let go, and you know that Johnny over here did something stupid and he shouldn't have done it. He didn't get in any trouble for it. I can try that too, and I won't get in any trouble either. It just spreads like wildfire. It's just the way it is. That's a degradation of society as we know it. Not a good thing, I don't think.
And I guess ultimately that brings me to a word that you like, a word that I like, and it's a word that I don't know if a lot of people really think about it, which is risk. The issues that I just brought up, I would always think, as you described, I would be thinking to myself, well, how do I fit into that situation? If I'm in the middle of that situation, what am I exposed to? What are my risks? Do I have risks? For example, if I'm in the United States of America, do I have risks if I decide to go buy a candy bar from 7-Eleven at 9 o'clock at night? Do I have risks if I go to a Walmart at 3 p.m. on a Sunday? We never really had to think that way, but that's in a lot of ways for a mind like yourself, the way that you've grown up in thinking about the markets. I'm sure you're now looking at life and saying this same type of thinking about life and applying your risk thinking everywhere.
Sure. Do I go to the Walmart in Scottsdale in a busy area of a busy city with who knows how many thousands of people in the place at 3 p.m. on a Sunday afternoon versus go to the Walmart in Payson, Arizona in the mountains right near my mountain home, which has 15,000 people in it. And on a Sunday afternoon, it'll be a few people in there, but it'll be half empty. You'll be able to find a parking space for sure. Very different risk structure. Yeah, you do start thinking about that. I've mentioned to my wife multiple times that if the SHTF, it's an acronym that many people will know what that means. I'll refrain from saying it. You can swear.
I don't have a problem with swearing, Tom. You're a nice guy. I've never heard you swear. I grew up playing too much baseball.
SHTF, I'd rather be in the mountain home than I'd be in Scottsdale, even because Scottsdale is in a city of between Scottsdale and Phoenix. They're side by side, Mesa, Tempe. It's all one big metropolitan area. You're talking 4 or 5 million people in the metropolitan region. And there's a lot of stuff going on that, especially you get to like South Phoenix or something, those cops down there get a full shift.
It's an interesting comparison if I think about it. Like, okay, going to a very busy inner city Walmart, for example, or just big city Walmart, and the crowds that might be there versus the mountain retreat Walmart, I can almost think that folks that want to say they're trading 5-minute bars, the people that say they're trading 5-minute bars, I never believe them. They just tell me these things, but they say they're trading 5-minute bars. I think they're at the really busy Walmart that's chaotic. It seems like that if you're trading this crazy thinking, your risk understanding will have you at the crazy Walmart. If you have a sound, practical approach, you're probably going to be over here at the mountain Walmart.
Sure. That might be. Yeah, you're kind of in the noise versus the information, maybe. There's risks with a lot of different things these days that I do end up having to think about. Well, another one, for instance, the new house we just bought and we're starting to remodel. That's going to be quite the project for about 8 or 12 months. We've just started 3 weeks ago. I'm at the early stages of it. You look at where that is located, it's in a man-gated community. And a lot of people don't like those for various reasons, and some people would insist on them. The reason we wanted to have it is we have two houses. We're not in any one location all the time. It's kind of nice to have somebody looking over the place that you could call and say, could you run by? I'm getting an alarm on this. Could you just swing the security vehicle by and look in the windows and see if there's something going on? If you have somebody that you can call to do that, that's great. I guess you could rely on neighbors to a certain extent if you could find a neighbor that was close by, but you're getting a little bit of matching your lifestyle and an abatement of risk to your situation where you know there is a risk. You kind of make decisions.
Let me see if I can, as we're in this wandering topic, not wandering topic, but I can take you anywhere, but you've got some great perspectives. Imagine you're talking to yourself today. You are 25-year-old Tom in 2023. How much different is the world that you would be facing today as a 25-year-old Tom in 2023 versus as an established, successful Tom at your age now in, quote, retirements in 2023?
Quote, retirement. You and Lawrence Bensdorp are always getting after me for that. The 23-year-old Tom would sort of have his life planned out, have a tremendous amount of energy, be doing 5 things at the same time all the time. I would be much more caffeinated than I am now. I would be very impatient with the grandfather that I am now.
When you, Tom, started back in the day and comparing that playing field that when you started to a Tom if he had to start today, do you see the playing field differently?
You're talking the money management business?
Trading, living, yes, all aspects.
Well, yeah, trading and living back then was quite a bit more straightforward. You kind of knew what you had to do. It was very inexpensive to start up a commodity trading advisor business. You basically had to show that you knew what you were doing, and people would start giving you money, and pretty soon you're managing enough to pay a decent salary, and you're hiring other people, and you're putting together a firm, and it's just one thing led to the other. Nowadays, you'd have to have maybe a minimum of 5 people with different disciplines. You have to have backups, you have multiple locations, perhaps, an office. You'd have to have 20, 30 times the amount of money under management for anybody to take you seriously. I mean, I got my first big account when I had 6 million under management, and somebody gave me 4 and got me to 10. And once I hit 10, it was real easy to get to 20. And when it's 20, it was easier to get to 40. All of a sudden, I blink and I'm over 100. Today, nobody would look at you until you get to 100. So how are you going to get to 100 if nobody's going to look at you? It's insane what you have to go through in today's business. Very convoluted. And yet at the same time, back in the day, there was con jobs. There was people that would steal and fraud investors. And guess what? Today, there's people who will steal and fraud investors. We've added scores and scores of laws and regulatory agencies and burdens on the honest operator in the business. And at the same time, people are still getting scammed. I had a childhood friend milked out of $280,000 on a Facebook crypto scam, thinking he was talking to me.
My brain paused for a second. Restate that. I want to make sure what you just said.
Childhood friend was frauded out of $280,000 in a crypto scam by a guy portraying himself as me on Facebook.
No recovery?
Nope.
That's tough. And you know what? I'll say it. You don't have to say it with me. I got censored by Facebook for linking to a CDC report in February of 2022. Nothing controversial. It was on the CDC website. They suspended me. And at that moment, I said, okay, that's it. I'm not playing on Zuckerberg's game anymore. Basically now, over the last year, I'll post my podcast episodes on Facebook, but I really don't participate anymore. And the example that you just give, the fact that there's no recourse, the fact that you, Tom, have had no recourse for all these years to establish yourself as a known person, that Facebook just sits there with all this freaking money, doesn't allow any support. You can't ask a question. You can't complain. You can't do anything. and then people are getting screwed over is just infuriating. I'm glad I stopped.
If you'd like me to rant a bit more, think about this little gem. Facebook has a lot of technology in all this artificial intelligence, and they're doing all these meta universe and 3D simulations and all that. My photo is on my enjoytheride.world Facebook corporate account. Pretty picture of me. I was in a tux because I was celebrating because I got the book done. So we went out to dinner that night. I had my tux on. We had a photographer take pictures. That was the same photo that the imposter used. Now, you and I both know that you can get photo recognition software, and I'm certain that Facebook could do this. Look and see that somebody was just opening up a new account with the same photo that's already been used on another account. Now, when I report this scam guy, and I'll report him and I'll say he's impersonating me, and here's my account, and they'll shut the guy down. So if I catch him before he scams somebody, I can shut him down. What do? They ask me for proof that I'm really Tom Basso to verify that I have the right to get this scam account down. They ask me for ID. Now, why don't we do that before the scam account is opened? Wait, we got the same photo. You're trying to open a new account. Prove that you're Tom Basso. Send a copy of your driver's license or something. No, they don't want to do that. They let the guy scam people and get a lot of engagement and who knows, maybe even sell ads.
You disagreed with me on Silicon Valley Bank in the sense I made the case that perhaps their risk management was just to get bailed out. And I would take it a step further. I say to myself, well, a lot of these were the VCs, the Silicon Valley VCs, the crypto VCs. I don't know. Maybe they wanted Silicon Valley Bank to go under so they could tell people, oh, now you've got a use case for Bitcoin. Wham, bam, thank you, ma'am. I guess I look at the Facebook situation and I say, they do it on purpose. I'll share with you. I think it was 5 years ago for the first time. 5 years ago, I took my phone and I heard there was a website. I wasn't sure, and I don't even know what the name of it is today. I'm sure it still exists, but I took a selfie of myself. I went to some random website, didn't have to log in. I uploaded the selfie of myself and it told me who I was. That was 5 years ago. Yeah, the fact that they do that to you and your friend, why should I not have the conclusion that it's not done on purpose?
It may be. I mean, there may be some compelling business reason why you have more accounts. I mean, when Twitter was purchased, there was this big controversy over the robots and how many of Twitter's actual users that were reported are actually real people. There was some thought that a good 15, 20% or more of the people or the posts and everything else on Twitter are really being done by computers. They're not real people at all. Therein gives you bigger numbers for charging for ads. Twitter's losing money and they're trying to make a living. They have a negative impact on their earnings if they were to be able to get rid of every non-account, non-real person account. Motivations maybe lie on keeping as many accounts on the books as possible, even if they're completely fabricated.
This is a great moment to pivot to the price. In this world of chaos, this world of potential crime, this world of sordid risks, finding something that you can believe in that appears to be true. For example, like a futures price traded at the CME. So far, so good. Those appear to be true. It's terribly sad that your childhood friend that happened, if other people can hear the story, they can say to themselves, I never want to be in that position. If I'm going to take wisdom from Tom, then I'm going to take wisdom from Tom by reading his book or listening to him on a podcast. Or if Tom had an affiliation with a registered serious company like Standpoint, then I might make an investment. Getting people to realize that all the fluff isn't the real. So what is real? The real is the price. If Tom is telling you to make an investment in something, don't trust Tom, trust the price. You can go verify Tom, but it's like, I think getting people in this mindset of investigating and verifying, terribly important.
I get a lot of direct messages and emails asking advice. If you really analyze the way I answer a lot of those, I'm really trying to offer possibilities that they should consider. But I don't think I ever say you need to do this, especially if it's involving with me selling something.
I've never heard you say anything like that.
My big thing is everybody should develop what works for them. Say trend following. I mean, you're the master at trend following. That's your big book that can be used as a doorstop if the wind's blowing in hurricane.
It's a weapon, Tom. It's a weapon.
It's a weapon. It's that large. Well worth it. It's a great book. The point I make is that you could take trend following, the concept mathematically of trend following, and you could apply it if you wanted to 5-minute bars, or you could do it to monthly charts, or you could do it to weekly charts, daily charts, 4-hour charts. You can trade futures with it, stocks with it, bonds with it if you wanted, gold with it, whatever you want, cryptocurrencies. I think that that's where it gets customized by the individual. If you've got a guy that's on the road, how can he be watching 2-hour charts if he's on an airplane? He can't. He has to custom design a trend following approach, let's say, that makes sense for his lifestyle, his situation, his knowledge levels, skills levels, the whole thing, the whole gamut of who he is. His financial puzzle that he's trying to solve is different than Tom Basso's financial puzzle, which I've worked hard to solve. We're going to come to different answers because the puzzles are different.
Would it be fair for someone like me to hear you say that and to give a wide perspective on how something like trend following could be interpreted? One of my thoughts might be, well, why is this smart guy Tom not doing 5-minute bars? Why was that smart guy Bill Dunn not doing 5-minute bars? And John Henry and AHL, the Dutch guy at TransTrend, and Larry Height and Ed Sakota, why were all these guys not doing 5-minute bars? Now, Tom's being very nice and he's saying, hold on, you've got to do your own way. But I'd be saying, hold on, why is Tom not doing 5-minute bars?
Yeah, but let's give you another example besides the multi-billion-dollar collectively managers that you all described there, and go to somebody new in the industry that's just starting out, retired doctor. He's got a lot of time. He's got plenty of money, but he's peeled off $50,000 for his trading account. And he really does want to dig in and be in front of his screen all day. You and I don't want to be, but he might be. If he wants to do that, and if he wants to use trend following techniques, I see nothing wrong with trying to do that because he's not going to have the liquidity problems and the scrutiny by the clients of lots of transactions and all those legal issues and audit issues and reporting issues that go along with that for all of us that you mentioned that we're professionals in the industry.
But you guys didn't start as professionals. You started as average guys too.
Right. When I started, I didn't have enough time to do 5-minute bars. I was being a chemical engineer during the day and doing this at night.
Let me see if I can push you on this, though, in the sense that I get your point. I've said this on my podcast, too. I said, look, if you want to be Jim Simons, you can try to be Jim Simons and trade at the speed of light. You can try to go there. There's a lot of issues that you have to manage at that level and that speed. Whereas trend following with daily bars or weekly bars, an entirely different ballgame. I would say to the audience also, too, that it's always been interesting to me whether they were starting off with 5 million or worked their way up to $1 billion or whatever under management. It's always been interesting to look at the track records. And I guess I've just never seen these large numbers of trend following track records at the 5-minute bars. They might exist, but I've never seen them.
I have a different track record curve. When I've done studies where I've taken it intraday and used similar models and looked at different time periods, it tends to run your reliability up slightly. Over my lifetime, I'm probably somewhere in the neighborhood of 33% reliable, and my profit to loss factor is probably 3 to 1 or somewhere in that ballpark, 3.5 to 1, I'd guess. As I've run studies, as you go down, of course, your number of trades goes sky high quick. The second thing that happens is your reliability starts going from 33 and starts gravitating up towards 40. And we're just doing the same thing, just changing the time. The other thing that happens is the profit factor goes from about 3.5 down to about 2.5. And so you're doing lots of trades. You're eking out a profit over lots and lots and lots of trades. So you're basically becoming the casino with the 1,000 slot machines on the floor, and you're picking up tiny bits, but you're having to do a whole lot of machines and a whole lot of trades to get there. So that's the way that shifts when I look at it mathematically and try to simulate it.
I want to shift you into the idea of big events because possibly we're living through one of those big events right now.
You mean the launch of my book?
Yeah, that's a big event for sure. As we leave the topic of trying to trade at those smaller time frames, I think it's fair to say that going back all those years, I can't remember if you were called Mr. Serenity before Jack wrote that chapter or after, or he named you. I seriously doubt that I would be having a conversation with a trader today in 2023 who's been in the markets for 50 years, who has the nickname Mr. Serenity. I don't think that name would exist if he was trading 5-minute bars for 50 years. In fact, I would bet every penny of my life on it.
Yeah, well, I wouldn't have had time to do the interview with Jack if I was doing 5-minute bars because I wouldn't have had even the hour and a half it took to interview me.
I don't think serene. I think it might have been Mr. High Octane or something different. Let me shift you into something, though, where here we are now. And I think one of the most interesting things, whether we're calling it trend following or an all-weather mindset, I think one of the most interesting things is that this type of thinking and strategy, that when the world goes to the figuratively hell in a handbasket and chaos unfolds, a black swan swims in. This style of thinking and trading that you've been involved in so long seems to do very well. Look, I'm not making a prediction. I can't say always. Just seems to be the historical track record when things happen. Long-term capital management, dot-com crisis, fall of 2008, 2022. Why is this? You're going to talk to someone and you're going to start to explain to them why your mindset, why your trading strategy can seemingly do well when the rest of the world has trouble. Why is that? How do you break that apart to start to explain to people?
The reason is, I hate using gambling analogies, could be the thought of doing a lot of trades, a bunch of slot machines, and you got some kind of progressive slot machine of some sort that has the potential huge payday. Your job as a slot machine player is to lose a little on this one and make a little on that one, and you have a small payout and it pays for a couple more turns, and you go along. And let's ignore for the fact that the casino is always taking their 8% or whatever it is off the total play. What happens in the world is you have these black swan events, and that's just simply financial or commoditized disruption to some market someplace where you have a plague on a crop, you have a drought, you have a frost on the orange juice crop, you have a war in the Middle East, so oil goes crazy. Any one of these events creates price movement because you've dislodged the normal supply and demand of that market. One side is definitely out of whack with the other. Prices have to compensate to bring trade back together. Well, a trend follower, by its very nature, the math behind trend following says, I'm going to ignore noise, but when it gets to this point, it's no longer noise. It's now moving up or it's moving down, either way. And the trend follower, if he or she is disciplined, says, I don't care what it's going to do. I just know that it's doing something today. I'm jumping on the train. Hopefully it continues to go. And a lot of times it doesn't. I mean, 2 out of 3 trades, I lose money. A lot of times it doesn't go anywhere. And even in the 1/3 that goes my way, a lot of those are kind of duds, make 2 times my risk or something. I'm not going to retire off of that. But every now and again, recently with the orange juice trade that we were in on, good grief, it just goes every day like it's jokingly put on Twitter, like a F-22 going after a Chinese spy balloon. Straight up, afterburners are on, and that's the way the prices look on the chart. That's why one of those large trades, all you need is maybe 1 or 2 a year, and you've had a great year. The rest of the trades can just break even. You make a little, you lose a couple times, small amounts, you make another little. You lose a couple times, and all of a sudden there's that one trade, and you just hang on for dear life and enjoy the ride.
We've talked about it on many podcasts episodes, and I implore people to go back and listen to all of your episodes. It's a great training class. I never get sick of finding what you just said interesting, meaning the way that trend following works. It's novel, it's creative. There's not really ego there. You don't care where the money came from. It's just a fascinating approach. It never ceases to amaze me as to how cool it is.
And I'll tell you, the hard part for most investors, especially if you're starting to do it very long term, like you're doing weekly charts or you're doing monthly charts or even daily in some cases, in an orange juice situation, for instance, where it just goes and goes and goes and goes. And then when it turns around, it starts limiting down every day. And you're looking at your equity, and it's like that famous silver trade that Jack wrote about with me back in whenever it was, 1985 or whatever it was. I was on silver. I did the right thing, but I had to hang on for dear life, and it just scared the living daylights out of me. I went from $500,000 all the way back to $250,000, still ended up doubling my account size, which was really good, but lost half of my account from the equity peak. That is very rough mentally to deal with. I think a lot of people abandon trend following because of the mental aspects of what can happen during a drawdown, or at least even on a given trade, giving up some of those profits and realizing that's part of the math. Part of what you're supposed to be doing is giving up those profits because the market needs room to move. If you put your stops too close, you're going to get stopped out, and you're not going to really be trend following very much. You're not going to get that big winner because you'll be stopped out quickly.
Funny thing is, though, too, is that people, they haven't had to feel it for a long time. People can give up 50% of their buy and hold approach as well. Maybe, who knows? Maybe we might be in the middle of one of those periods right now. I have to say, Tom, I talk to a lot of people. I see a lot of books. You've been very important to this podcast. So I really want to implore people, because it's not about the economics. Tom's going to be fine. Tom puts the time in. He has created a new product, his new book, The All-Weather Trader. Look, for the cost of education, the cost is pretty small. You got a guy who's been around for 50 years giving you, look, I'm just going through the table of contents. I mean, it's all the things you have to be thinking about if you're going to come into this world. What's a complete trading strategy? Timing, hedging, diversification, all the pieces that you should know about. And maybe you've heard about them in some other place or whatnot. But hey, you know Tom, you hear Tom. It's always great to either learn something new or be reinforced. There's not a lot of people out there these days that are creating what I would call just an honest take. There's a lot of people out there selling the latest candlesticks book or the latest 5-minute bar book. This is not you. The All-Weather Trader, pick it up. Subtitle, Mr. Serenity's Thoughts on Trading Come Rain or Shine. Umbrella. I mean, I can't imagine the last time you used an umbrella in Arizona. When's the last time you held an umbrella in your hand?
Actually, Sunday. It was raining when I was heading up to sing in the church choir. So I ended up having to get something over my head, or I would have been drenched by the time I walked in. We're supposed to have rain tonight. We've had more rain than we usually do in a couple months than we usually do in a year. It's been living in some other tropical climate here in Scottsdale. It's been very strange. The desert super bloom this year is unbelievable. Beautiful.
Well, Tom, it's always cool to talk to you. We've spoke so much for the podcast over the years. Sometimes it can feel like, to me, and I'm sure the same for you, it might sometimes feel like, did we just talk? No, it's been over a year. How does that happen? It's strange.
Well, we're both busy guys. I'm retired.
Oh, yeah. That should be your new joke. Your business card should just say, Tom Basso, I'm retired. That should be your business card.
My business card says, Tom Basso, unemployable.
I'd have a similar problem. Maybe that's why I'm not even in the States anymore. They won't let me return.
I'm not even sure at most companies you could put me on a board of directors. I wouldn't be a thorn in their side. I'm pretty much unemployable, but I find a lot of things to keep myself amused.
But that's a great place to end it, though. And I think it's a goal that people should be thinking about, because if you have a trader who's been in the markets for 50 years, done quite well, and he says he's unemployable, he's laughing when he says it, but he's dead serious, actually. And he's saying it as a badge of honor. He's saying it as, this is the way that I want to live. I'm reading your mind. This is the way that I enjoy to live. Put aside the trading stuff for a second. It would really be incumbent on those listening to really understand why Tom is saying he's unemployable and why he's proud of it, why he likes it, and why you might want to consider that style of a life yourself. I'm just adding some feedback there from my perspective.
No, that's true. I mean, people that work for a big corporation, there's going to be procedures, there's going to be legal benefits provided, there's going to be a safety net, if you will, for your family, maybe the health plan and all that. In my case, I'd rather control all that for myself, and I'd rather not be beholding. If I want to work really hard on a Sunday evening at 5 o'clock at night, so be it. If I want to take Monday morning off to go fishing or something, so be it. I get to make those choices, and it's really hard. If anybody were to employ me, they would want to be expecting certain things out of me. It's just not me. I try to find the challenge and the goal, and I want to get this book written, and I got it written, and I'm going to get it out the door, and March 28th, away it goes. I'm in a sort of unique position, I guess, in that I'm chairman of Standpoint, but that doesn't mean I go in there every day and manage the investments like Eric has to. I show up for quarterly board meetings and have an enjoyable time having lunch with the guys. Yeah, I give them a few pieces of advice here and there, but that's the closest thing I have to a job. It's really more of an honorary title or position. Everything I do with the website is completely done whenever I feel like it. When I schedule interviews with guys like you, it's whenever I feel like it. If I don't want to do an interview with you, I don't. But fortunately for you,
you keep coming back, so I don't know. I must be okay.
Michael, you and I always have a good time. I enjoy your interviews. I've listened to a bunch of other interviews besides Tom Basso's interviews. I love when you talk to Larry and some of the other people.
The book, The All-Weather Trader, Mr. Serenity's Thoughts on Trading, come rain or shine. I will say, though, you just made a point. I'm not going to let you elaborate because I want to end it on it. You talked about the safety net that might exist working for the corporations and stuff. I'm going to tell the audience something really quick. Let me give you a hint, audience. I don't think Tom really believes there's a safety net working for the big corporation. He might say that, but I really don't think he believes that. Again, everybody, go grab the book, The All-Weather Trader. Tom, thank you very much.
All right, thanks, Michael. Good to see you.
I'm holding in my hands my fine new book, Trend Following Mindset, The Genius of Legendary Trader Tom Basso. This book inspired by the many interviews with Tom on this show. And as you might expect, if I'm going to have a new book about Tom, influenced by Tom, inspired by Tom, including all kinds of work from Tom, well, you might expect Tom to be on this show again. And today he is. Without any further delay, and if you're not aware of Tom, of course, check out the new book, Trend Following Mindset. But for starters, episode 400 on this podcast. Episode 400 is not necessarily a prerequisite for today, but it's a good starter. Without any further delay, let's jump right into my guest today, Tom Basso. I got an email last night. It says, "Hi, Mike. That's great news that you have your new book with Tom translated into Thai language. I'd get one for my girlfriend if she was into trading, but she isn't. Here's the kicker. You're going to smile when you hear this. I've been wanting to ask you a question for a long time. I wouldn't ask it on Facebook because I don't want to embarrass anyone. I mean no disrespect to you, but I have a curious mind. After multiple appearances on your show, and now that you've written a book together, I just wonder why you continue to mispronounce Tom's name. It could be that Mr. Tranquility, now here he is. He's saying Mr. Tranquility, which is the wrong name. He goes, it could be that Mr. Tranquility is just too nice to correct you, or maybe he just doesn't care. Either way, I'd love to hear the story if there is one, or you can just tell me to shut the blank up and mind my own business. Up to you, as they say here in Thailand.
At the risk of increasing Jack Schwager's sales, he should buy New Market Wizards and look at my chapter.
I don't think it's called Tranquility, is it?
No, it's Mr. Serenity.
So here he is. He's ripping me for ripping your name wrong, and then he's going ahead and saying it wrong as well.
Michael, it's so exhausting being a superstar like you.
Hey, look, you're on your way. I don't know. You're nicer than me. I've got a little too much of a hard edge sometimes. But I got to tell you, I saw a tweet, and this is kind of an interesting way to jump into mindset. I saw a tweet where somebody said something to the effect of, well, I liked Tom until I heard him say something about politics. My first thought was, okay, what is politics in the modern age? Well, it seems to either be one side has kind of got a open, rational, logical mind, or the other side is just pure emotion. So my thinking is here's a critic, somebody who says they like you, but then they just don't like you now because they heard you say something political. And I'm thinking to myself, what would you expect the engineering mindset guy to do? To jump up and down, to scream, to yell something? Like, it's not even really a political question. It's more about how you operate. I don't know why somebody would expect you to be Mr. Emotion. Of course, we've all got emotions, but you know what I mean?
Same thing's true when we had situations like we had the COVID stuff where I'm downloading spreadsheets of data from the CDC, deriving conclusions of the survivability rates and stuff based on the CDC's own numbers, which I think are a little flawed based on other studies of how people actually die with comorbidities and all this stuff. And I explain this on something like Twitter, and I get all the people who have been watching CNN or whatever that have been scared out of their wits' end, and they're just so frazzled. I'm just presenting data.
Isn't that the first way to analyze anything? What's the data?
Exactly. I mean, you start with the markets. You go get 20 years of data, you run it on a simulation platform. You try not to have any bias except to say, all right, I'm trying to see where the trend of these prices are going or something simple. There's lots of data that looks like it doesn't go anywhere. So call that noise, call other parts of it information. You're trying to separate the noise from the information. It's just a data problem. And mathematically, it's no different as a chemical engineer that I am. If you're trying to control a reaction and you've got a heat exchanger and it's getting too cold, the temperature control says, hey, it's too cold. Open the steam valve, bring in more steam into the heat exchanger and heat the process up until it hits the right number, and then close down the steam valve because everything's fine now. Kind of the same thing in the markets. It's now reached this point. We got to do something. It's the same exact math, same exact philosophy.
You bring up COVID, and not to be controversial, but if one has this engineering mindset, or even we shall say the trend following mindset, your first step would be, okay, what's the data say? And to not be emotional about it, to not be subjective about it, just what's the data? And when I say what's the data, okay, for example, with starters with COVID, who's dying? And is there a similarity between those that are dying? Apparently, for a lot of the people in our home country, that causes a lot of discomfort. But the data is not about discomfort. The data is just data.
Yeah, it has no bias at all. It's just data, numbers. In reality, the group that's the most affected are the group my age and my wife's age and all the older people. Well, guess what? Older people tend to die more than younger people, natural causes even, and heart attacks and cancer and all sorts of other things. To say that death is strictly COVID related in that the person was dying from cancer in the first place or got hit by a car, comorbidities play into the game, and it's going to be interesting. The data is just starting to come out now, and I will analyze it before the end of 2021 on total US deaths. I'm going to be very interested to see the breakdown, because they'll usually at some point within a 6-month to 12-month, they'll be able to tell us how everybody died in the US in more detail, and they'll have it cross-checked and It's going to be interesting to see the total number of deaths versus the population in 2021 versus 2020 when we were in the height of all this COVID stuff. I'm going to say that I don't think there's going to be a whole lot of difference in the total deaths out there.
Meaning what we did is we probably moved forward deaths.
Probably just shifted the labeling of some deaths from maybe like heart attacks over to COVID, or maybe from pneumonia over to COVID or something. There might have been some lung related types of diseases that you'll see go down and then COVID will go up. But total deaths are not going to be significantly different. But to look at some of the news, say last April, May, oh my gosh, you thought the world was going to end.
And this is just a curious mind conversation. This is not the back of your mind. You're thinking, how can my, I don't know if you have a side, but how can my partisan side gain advantage? We're just having a conversation about stuff that used to be normal to talk about.
When I first heard of COVID and everything started getting locked down, I was totally, my life doesn't change a lot. I sit at a computer. I have my wife. We love to cook. So once a week or so, we go out to the grocery store with masks and come home and be isolated. And it was no big deal. Trading was going well. We had a lot of things to do to keep us busy. So it was no big deal. I was totally happy to protect myself and my neighbors. But that gave me a lot of time to start looking at the data, and the data was not supporting locking everybody up at all, or especially closing down what is almost a $20 trillion economy in the US, and who knows what it is around the world, just to try to prevent transmission of this thing, which it seemed like it didn't anyway. It was kind of foolish. If you can get enough young people, especially, you're the guy that can stand on his head with yoga and everything, you're in good shape. The rest of us mere mortals that just go and work out and maybe do an elliptical session and a little light weights, we're in good shape enough to be healthy. You probably got like a 99.7% survivable rate, even if you get the thing, which is not a guarantee either. Why is everybody warping the entire world for something so ridiculously in your favor of surviving? It doesn't make any sense mathematically.
I've not been back to the States for 2 years, primarily because of COVID, but I happen to have been in a country, just to put the data point out there, a country of 100 million people that has experienced 50 deaths related to COVID. If you take the data a step further, my home country, the country that you're in right now, is the most obese country in the world. Vietnam happens to be, on aggregate measures, the least obese country in the world. That's just data. And you would think that 100% of all populations could hear those few data points and say, okay, that's a jumping off point. Let's get in there and let's find out what that means. But we can't do that. We can't do that.
No, this is the way it is. And it's a mandate. You must do it.
I did not check going back, though. Was it 2012? It must have been 2012, the first time you came on my podcast.
It was a long time ago. I have no idea.
2012. Well, was that a secret Tom plan all along that's come on the Crazy Mike's podcast, and then in 2021, there'll be this really cool book that I keep looking at? I really think it's my favorite looking cover. Really, I think it's the coolest looking cover.
The cover does get a lot of compliments. I'm considering repackaging myself as a senior male model. Maybe I can pick up some extra income.
Come on, that's an awesome picture, right? You know,
yeah, I know.
It just worked well.
I had no idea. You know, when I retired, I took a year off from trading. I was so sick of dealing with, you got clients, you got the government, you got audits and lawyers and accountants, and spending $100,000 a year on just wasteful nonsense, time and money. I just enjoyed life for a year, and I stuck my money in a money market basically and just relaxed. Actually, marrying Brenda really was the reason why, because she knew I was a money manager. We're going to get married now. We're engaged. She comes to me one day and says, I'm kind of almost embarrassed, but I've been doing this thing with this broker, and would you look at it? And she's giving me like a half an hour of apologies ahead of handing me the sheet of paper. And I said, no, I'll be happy to. It's no big deal. I've looked at these thousands of times. And I looked down it and I said, why would you be embarrassed at this? You've done above average job, in my opinion. So I was complimentary, and we're going to get married finally. And it was definite then. It was pretty obvious I probably should be the one. She's the real estate expert. She does all our real estate. I have nothing. She says, sign here, sign here, sign here. And I just sign. But when it comes to trading futures or ETFs or whatever, I'm her guy. I'm managing her portfolios and she's managing my real estate. It's worked out great. But the interesting thing is she has no idea. I started getting back into trading to manage hers. And then I thought, well, as long as I'm doing hers, I might as well do my own. So I got all the money out of money markets and I fired everything up. And then I had relatives asking me questions, and that started the Facebook stuff.
That's how you got on to potentially connect with everybody. Relative connections.
I was just helping relatives because I can put it in as Facebook posts. My stepson can see it. My brother over in New York can see it. My sister, if she wanted to, in Wisconsin could see it. Brenda's brother-in-law over in Atlanta could see it. I mean, you've got people all over the world. They all can see the one little post. Perfect. And then I had some old friends who were traders from the industry that saw it and said, hey, this is cool. They reshare something, and then all of a sudden somebody else has to be a friend. And then all of a sudden I've got 1,000 Facebook people, and people are saying, you really should go on Twitter. Larry Tantarelli, who I think, he's a trend follower. He says, and I helped him a bunch get started and a lot of advice. And he says, you should be on Twitter. There's a lot of people on Twitter. I said, okay, so I'll go over there. It's no big deal. I just put it here and then Control C, Control V, boom, out on Twitter. And then I got 27,000 followers on Twitter. So one thing leads to another, and you interview me and it goes viral. Getting 6 emails a day. My wife and I are out at the pool in Malaga, and we decided to enjoy the ride.world as a solution potentially to getting the information from me to the world in the least costly, most cost effective, you could say, means of getting it out there. Then that goes nuts. The website's been insanely, I mean, we get thousands and thousands of people visiting that website every month. I still get a few emails, but strangely, the emails are a lot less now than they used to be when we started everything. And yet my name is everywhere.
This will probably change things.
No, I don't know. It hasn't so far, but my life's not going to change a lot from what it is.
Let me push on you, though, a little bit. So all this starts to happen. Clearly, there's a fun process of giving back. So, you spend decades and decades having all the success and learning all these lessons. You're in your retirement. You're kind of like, okay, you've already chosen a path in retirement. But then I guess this idea of being an educator sucked you back in and started the mind going again. And you seem to really love that process, though.
You hear it's an overused phrase, but giving back, life's been very good, and the industry has been very, very good to me. There's people along the way that threw in their 2 cents to me, helped me through. You did Larry Height's book, and tell you what, Larry's chapter in Market Wizards just hit my brain mathematically and helped me develop my volatility controls that I used way back when. And that Trendstat used very successfully for a long run, 28 years. Still using them today. People help me whether they even knew they were helping me or not, just from saying something in an interview. I might have read it and it just hit my brain the right way and it triggered something and off I went. But it's kind of like at this point in my life, I've got 4 accounts I manage: my IRA, my personal account, my wife's IRA, and her personal account. I don't have to register. I don't have audits. I don't have legal. And life's good. And I play a lot of golf and I work out. And we're actually cooking buffalo chili tonight with real buffalo just to try it. Never did it before. So life's very interesting. And this gentleman that called me from North Carolina just about an hour ago, I've known him for 4 or 5 years. He's followed me on Facebook, I guess. He was at an interesting time in his life. So I just did a Zoom call at his request. They thought it was appropriate to help him at that point in the time. So I took, an hour. At the end of the thing, he is just profusely thanking me for getting him from completely confused to totally clear on what he needs to do. It's not that hard for me to do, and it's kind of satisfying because I'm helping someone. I could go work in a food kitchen someplace and hand out food to the homeless, but this is an expertise I have that's a little bit more unique compared to a lot of people could serve food in a food pantry. There's not too many people that could do what I do to help traders.
You brought up an example of what I did too, of somebody with confused charts and all kinds of indicators and whatnot. I make the analogy to something like cleaning the room. Everything's piled up all around the room, and you can't really even see where the bed is. That's like one of the first steps is just to, and I guess where this question is really going is kind of the timeless aspect of you, of something like trend following. Because look, there's a lot of young people, they might be saying, okay, he's older, he's retired. What does he know? The markets have changed. There's new markets, there's crypto. And what I think a lot of people don't get is us humans have not changed. You can change the skins, so to speak. You can change the playing field. You can add some new markets or whatnot. But humans, they move in herds and they like to go up and down. If that's the case, your wisdom is going to work long past the time that you and I are on this planet.
If you look at it from the standpoint of electronic communications, you have more ability to move the herd quickly with technology and with instant communications than you ever have in the past. In the old days, you had to wait till the Wall Street Journal came out the next day to get the fact that, oh my God, the markets crashed yesterday, and people starting talking about it at the lunch table. And by the time a couple of days go by, they make an action to their broker by making a phone call. Well, today it's Twitter shows the market's down 1%. And I'm on my Interactive Brokers account or whatever, hitting a sell signal in there within the next 5 minutes. Everything is speeded up so much. The psychology that used to take 2 years to do a bear market, 50 cents on the dollar in the S&P 500 back in 73, 74, is now accomplished in 6 months or less. During COVID, it was down, 30 something percent in 2 months maybe or something. Stuff happens quick now, but it's the same psychology going from euphoria to depression and back to euphoria. That hasn't changed.
What I love about how you just kind of do that depression, euphoria, back to depression or the other way, whatever, is that we can't really control that. And so you've got this great phrase that if I didn't co-opt several great phrases already, enjoy the ride is a fantastic phrase. I want to stay there a little bit with it because it's almost Buddhist clever in the sense that so much of the great Buddhist sayings, you read them, and if you don't have a lot of experience, it might just be, well, that's a sentence. But if you've got a lot of experience, you realize, wow, those old dudes a couple thousand years ago, whoever was writing all that down, really had deep insights into the human condition.
Yeah. Enjoy the ride, of course, came from a certain transaction that had happened, and I was just trying to put an end to a comment about being whipsawed. This is part of trading. Enjoy the ride. Everybody jumped on it so much; it's just way beyond me now. In Twitter, I think in the last 2 weeks, I bet you I've seen 10 or 15 different people end their little tweet as Basso_Tom always says, enjoy the ride. I got other people saying it now. People know what ETR means. It's LOL, laughing out loud or something. Everybody knows what LOL is. Well, now everybody knows what ETR is, in the trading world at least. It's crazy.
Let's tear it apart some, though, because it is deceptively simple, but very complex.
It is. It means stay in the moment, enjoy the process of trading, and let go of the results. The ups and downs are going to be there. You're going to have whipsaws. You're going to have huge runs. I mean, I've been on lumber for I don't know how long now. I glance over at my unrealized profit on the one contract I now own because I've sold off some of them. It's huge. I'm thinking, this is insane. Is the lumber market going to keep going like this? Maybe, maybe not. I don't know. If I could be in that the rest of my life, that'd be okay. But I'm enjoying the moment of where I am today. There's going to be good periods. There's going to be whipsaws. I'm going to have losing trades and winning trades. And all of that is not worth a whole lot except to be right where I am today, enjoying talking to you, which I always do. You're a fun guy to talk to. Enjoying seeing what happens to the book and enjoying seeing what happens with Standpoint. I'm the chairman of the board. We've got a board meeting tomorrow that I'm preparing for. And the kids, as we call them, two old guys on the board, me and another guy, we call the Standpoint folks the kids because they're all a whole lot younger than we are. They call me their surrogate dad. We have a good time, but they're slaying it. I'm consulting with a gentleman who's putting together a trading platform that will do simulations and run trading and actually execute the trades to the broker. That's been a lot of fun. I'm probably going to go live with it 1st of May, just a week or two away. I can't yet tell you the name of it, but you will know within the next month or two. Give you a little tease there. Just helping. He's asking questions. I'm trying to help him go in the right direction. I get to use this thing when it's done. That's a nice deal. It's like having somebody customize software for me.
Let me keep you at the ETR a little bit more because, again, deceptively simple but complex. Enjoy the ride means, or built into that, is how you deal with control and how you deal with controlling anything. You make decisions on how you run your life every day. Everyone does. But enjoy the ride has built into it that you're giving up control to some degree. Control where a lot of people think, a lot of new people, and perhaps even a lot of experienced people believe that when they look at the markets, they look at their systems or whatever, they think, they really imagine they can control it. They can control that outcome. They can control what's going on day to day. I have people tell me all the time, they write me and they say, trying to increase my consistency so I make money every day. I was like, oh, Bernie Madoff, great.
Yeah.
Speak to this idea of control, and why are you comfortable giving up control? I mean, obviously, you don't have the control, so it's easy to give it up, but a lot of people really struggle with this.
The way I looked at it when I started out back in the 70s, I'm starting to trade stocks and I'm looking at the New York Stock Exchange trading billions of dollars a day. And here's my piddly little $10,000 or whatever when I started out. And I realized that nothing I'm going to do in the market's going to amount to anything. I'm an ant compared to elephants. I've always had this attitude, even in Trendstat days, we were managing 600 million, but I was very careful to be a fairly reasonably small part of whatever market I was in so that I could have liquidity in and out. I never really ever thought that I could control what the markets do because there's so many other players and so many now trillions of dollars that are go back and forth and buying and selling. And the buyers and sellers both think they're right, but they're pushing them. And I always felt like I was just going along for the ride. And that's where the ride part of enjoy the ride comes in. And I think you've said this to me in one of the interviews that you can't control the direction of the wind, but you can adjust your sails. That's a famous one from sailing. You can also quote me on saying a long time ago, and it's been quoted several times since, I guess, that I always say the market will do what the market will do. And I think even Brenda might have stuck that in the foreword of the book. I can't remember. But I've told her that so many times. I'm sitting here watching the morning business show while I'm having breakfast or a coffee or something, and somebody will be predicting this and predicting that. And then my wife is over there telling me, yeah, but Tom says the market will do whatever the market will do. And I think that that's the philosophy I take for the market. So the markets are going to do whatever they do. My job is to just go along for the ride. And while I'm doing it, I need to manage risk, manage volatility, manage margin, manage the different things I can control and enjoy the process. I mean, there's no point in going through life miserable and hating what you're doing. So you might as well let the markets do what they're doing and don't agonize over predicting and angst over if you predicted wrong and all that stuff. That just adds a lot of stress and strain to your body, and that's not going to help your process.
How do you think, if you care to guess or theorize, how do we get to a situation where potentially bright people, maybe they've got a little money, they've had some success in life, where do they get the idea? Where does it come from that they can possibly be consistent enough to make money every day or every month? What's going on there, do you think? I don't know if I've ever been asked that question exactly that way.
The brilliant minds that I've run into, and I'm talking people who blow me away mathematically, computerization. I mean, these are geniuses. I'm maybe a smart guy that did some good things in chemical engineering and adapted it over into the markets, but I'm talking true rocket scientist type guys, NASA types. When I run into them, they almost can't even pull the trigger on a trade because they are so looking at the data and saying, if I take this data and apply every polynomial regression that I can figure out, I can match exactly what the market's doing and it'll tell me what it's going to do next week with 100% accuracy in historical simulations. So I'm going to just break the bank here. And of course, it doesn't work. They lose their money and then they're shell shock and they start doubting themselves. And wait, I'm a brilliant guy. My IQ is genius level. I think there's a tendency to start thinking that they can actually figure out the puzzle that is unsolvable. The markets will always do what markets will do. And they're so complex that, in my mind, in just natural events, a volcano goes off in Iceland and shuts down air traffic for a week all across the Atlantic. That's affecting economies, it's affecting stocks in American Airlines and all sorts of stuff. How do you know that that volcano is going to blow? There's just unexpected sunspots that are going to come in and they're going to throw the market off in a direction that none of your algorithms are ever going to predict. So you just got to let the market do what it does and realize that it's going to go up, it's going to go down, sometimes it's going to go sideways. And if you can deal with all three of those little three scenarios, you're home free. Just keep doing it and enjoy the ride.
Years ago, the first time I met Ed Sakota, maybe 20 years ago, and when I was doing some homework on him, I came across at that time a paper online, a high school paper from his son. So his son was a teenager. I looked at that paper, maybe his son was 14 or 15. I looked at that paper and it was 10 to 20 pages long and it was solid math. I had no idea what this was at all, right? I draw the conclusion, I think to myself, well, Dad is an MIT grad. Dad probably gets all this too. But I bring all that up because this same guy that understands all of that math is the same guy who has the whipsaw video on YouTube, which probably now has 500,000 views, maybe more, I don't know. It's an interesting process sometimes to see where some of those guys that really have that genius level math can kind of like put it in their holster, so to speak, and then turn around and get the psychology that you get, which is the enjoy the ride or the whipsaw song, all that kind of stuff. As you just point out, a lot of guys with the superstar math ability, they get frustrated perhaps psychologically.
I was going down that path in my 20s. Seriously took 4 or 5 years of a lot of modeling and a lot of thinking I could figure it out. And then I realized somewhere along the way that letting my profits run and cutting my losses short, simple trend following, and simplifying and making it less complex made it more robust. As I've mentioned to a lot of traders, there's a difference between perfection and reliability as a trader versus making money. You're not in trading trying to be perfect, you're trying to produce a profit. And those are two different things, very different things. And I think people think being perfect is going to lead to profits. It's not true. For example, I'm over my lifetime, somewhere around 2/3 of the time I'm wrong, 1/3 right. I'm okay with that because I'm profitable. I live off of my portfolio. So that's fine. I'm trying to be profitable. I don't really care about being right all the time. I just want to be profitable. And I think that that's something that takes a while for traders, and some traders never get it. But I think most traders eventually, as they mature, start realizing you're talking to enough people and listening to enough interviews and podcasts and whatever. I think you finally start figuring out that it's a long-term process and losses are part of the process. I think Ed Sakota once said, having profits without having losses is like breathing in without breathing out. They're both sort of part of the flow that you have to go through in trading. And when you settle into that, you're okay managing your losses, letting your profits run and being patient with them. Then I think you finally get there and you realize, hey, I had a positive year. I have to pay the IRS a bunch of money.
But hold on, now the IRS just makes up money and they send us money.
Yeah. Yeah, don't get me started on how stupid that is. And it's our money they're sending us, and we're supposed to be happy about it.
I've had a chance to interview you many times. This is the first chance that I've had to interview you kind of on video. And you have this very even keeled voice and persona. When is the last time that you got mad? Or has it changed over the course of your lifetime where you've gotten older and you've gotten more enjoy the ride? Or were you younger and you had periods of, because I know I did for sure. I definitely could feel the difference in age in terms of that benefit. Speak to me about that. What causes you to sometimes get off the ETR? Anything these days?
It's very rare, but I can think of maybe some instances where I get mad at myself for not thinking through a reasonable strategy on a golf shot or something. Like I try to pull off a shot that when I sit back and reflect on it, that was kind of not a real smart thing to do there. That can make me mad, and it's mostly mad at myself. Brenda and I have put together quite the lifestyle, I think. We have our home in the woods for the summertime, so we're up in the mountains at 5,000 feet. It's a lot cooler. As you know, I live in Scottsdale during the winter. It's 330 days of sunshine, golf courses, like 200 golf courses in the metropolitan area, and I'm a golf nut. I kind of live in heaven in both places. Our lifestyle is very, very tightly put together, and we're both on the same page with things food wise. We both don't like onions, strangely, when we cook. So neither one of us uses onions, to just coin an example.
Tom Basso does not like onions. That's what makes him mad and angry. We've got to the secret today.
You can go back and look. I don't know if it's still on Facebook, but I published a study I did of the value purchasing power of the US dollar plotted against the US per capita consumption of onions. And as onion consumption has increased every single year in the US over the last roughly 35, 40 years, the US dollar's purchasing power has gone nowhere but down. My conclusion is we need to stop eating onions if we want to save the dollar. Everybody got a big kick out of that in the trading world, and I published that. It had a really beautiful graph and everything. The joke is really, I just don't like onions. But here's an example. I ate all my life. I traveled the world, and I had to watch my weight because you're eating in a restaurant with clients all the time. And so I'd always have a Cobb salad wherever I went. And there's usually one on a lot of menus. Cobb salads are pretty worldwide. And a Cobb salad is a very specific set of ingredients, and I can eat them all. The dressing, okay, I got that. I can have lunch. Lately, in the last couple of years, I've had 2 Cobb salads come to the table with raw rings of onions laying across the top for decoration. And I turn and look at the waitress and I say, that's not a Cobb salad. If you're selling a Cobb salad, that's a specific thing. This is something else. It just frustrates me to see what people are doing with onions, but it doesn't make me mad. It's more frustrated.
You bring up the government, and I would have to say that I've gotten very frustrated in watching things in the last 4, 5, 6 years. And a lot of my frustration, I think, comes from the fact that if we look at the data, the pure data is being ignored. That's one issue. Secondarily, there are powers that be that want that data ignored, or they obscure the data, or they lie about the data. That's very frustrating. And then you've got a media system that is really pushing agendas. And the hard part for me is that coming to that real conclusion, I can't control it at all. I don't know if anybody can anymore. I have serious doubts as to whether or not the type of government in America will continue well into the future. It's a really interesting time right now.
It is. I seem to be on the receiving end of the negative side of these times. I don't see how quality of life in the United States is increasing. And as I was describing to somebody last week, there's an economic term that's perfectly captures it. It's called utility. The utility of something is sort of, in economic terms, the price you pay for what you get, kind of. So you have a thing in your life that you've had to pay to put together, or to buy a house in the mountains cost you some money. The utility you get, or the benefit of the cooler air in the summertime, for me, the ability to play golf in the mountains, the ability to go hiking, ability to work out. We call it summer camp. Our ability to do this has a certain benefit, and it costs us something to receive that benefit. So when we wrap that all together, that's the utility. If it's a positive utility, it's a good thing. If it's a negative utility, it's not good. My utility in the United States, given how I've structured my whole life and my retirement and my trading and my website standpoint and helping people with simulation packages, that's all a lot of fun. I have a certain amount of utility to my lifestyle. It's on the decline, unfortunately, thanks to the US government. That's not helpful.
If you think about the idea of giving back too, here you are at a certain station in life, and I look at kids today that are 20 years old, they're being bombarded with media messaging and government policy that doesn't make any sense at all, but they don't necessarily even have the foundation to be a skeptic, to criticize. It's almost like they're kind of taking these kids K through 12 and laying them on their back, forcing their mouth open and putting the fire hose in. A lot of parents are just going along with it because I guess everyone's afraid to speak up. But again, back to the data. I mean, this is just, I'll give a concrete example to be controversial for a second. If I think about something like crime, there's all kinds of crime in America. Okay, that's great. So then what we should be asking as Americans, where is the crime? Who commits the crime? When is the crime committed? What cities? All these kind of basic questions. But we've reached a point where those kinds of basic questions, which really are not political at a base level, we're not allowed to ask those things because there are people with political agendas that don't want just the basic information known.
And you're obviously a racist for even suggesting that we look at the data.
We become kind of like an ad hominem society. If I don't like what you say, I'm going to call you a name, and I'm going to call you a name. It's almost like saying, well, you beat your wife. You know, it's that kind of crazy talk, and you can't respond to it. It's crazy.
What's bizarre is in my lifetime, I'm a lot older than you are. I am probably the most vilified segment of the population in the United States. I'm an old white male.
One step away from being a Nazi.
I'm probably a racist, fascist Nazi too. I mean, I'm the most vilified small segment of the population. Here I am, not bothering anybody. I'm helping all sorts of people. I give a ton of money to charity. I mean, you got to be kidding me. It is so illogical. It's hypocritical.
If we were to model this too, if we were to take all the inputs that you and I are talking about, if we were talking about the actions, the reactions, the media players, the government decisions, and we were to try and take all this in and model it, it just doesn't look so nice looking into the future.
No, it doesn't. It really worries me. The utility is going down, sadly. You know what I've done? Doing little things like in the condo complex I live in down in the Scottsdale area. I've got a nice luxury condo, elevator for myself and everything. I haven't liked some of the landscaping, but I've taken courses in landscape architecture and pruning and all sorts of weird esoteric landscaping oriented topics. And everywhere I go in the world, I always visit the botanical gardens. I've got lots of beautiful photographs. And I said, you know, the utility of that landscaping is not good, and it's not getting any better because they've left the wrong plants there. There are too many plants. I am going to volunteer to the new board that was coming on. I'm going to go in and convince them that I am smarter in landscape architecture than all of the rest of the residents here together. I'm going to get their permission to go in and take a whole section of the condo complex, and I'm going to just spend a few days. It took 4 days. And I'm going to take out about every second or third plant selectively, leaving the other ones to grow and be beautiful. At the end of 4 days, I had had about 20 compliments from residents who were walking by and complimented my work. I had the board completely agreeing to allow me to create a whole landscaping plan for the entire condo complex between now and fall, which I volunteered and will be happy to do, and it'd be a fun project for me in retirement. We'll execute that starting in October. What am I doing there? I'm spending some effort, but instead of when I walk Banjo the dog up and down the street, looking at some of this stuff and saying, gosh, why would anybody put that plant there? I'm now going to look at all this beautiful landscaping and say, wow, I love living here. I'm increasing my utility.
Interesting thing that you said there is you said You weren't being cocky or overly confident, but you said something about being smarter about the landscaping. I think this is an interesting way that people have gotten lost in the modern age. You didn't say you were smarter because, oh, hey, I'm all that. You had already given the foundation that you've traveled the world, you've seen the botanical gardens, you have experience. And anybody that starts to do something like that, who has a passion for something like that, they build up there's a certain gray matter that increases. You see things that perhaps the average 25-year-old in Scottsdale who might be managing the garden, who has zero experience, doesn't know.
For example, the ex-board members who used to be running the landscaping that created this nonsense were a little pissed off at me for going in and taking out a bunch of plants. So they came down in a huff in their car 2 days after I had started the process, and one of the current board members happened to see them looking out his window. So he watched them for a while, and they'd talk, and then they'd look at the plants, and this guy's looking over there, and that woman's over looking at this one, and then they're coming back and talking some more. They can't even tell what I did. It looks fabulous, and they can't figure out what I did because they were going to complain about it. And they kept doing it for 10, 15 minutes. They finally gave up, got in their car, and drove back up to the end of the subdivision.
You've just described America on almost every issue. You have a certain level of inexperience on major issues, and all these people with inexperience are being allowed to make major calls. And there are so many, regardless of political stripe, there are so many wise people with lots of experience that are just kept out of the power system these days. I don't want to belabor the point, but it's funny days for Mr. America right now.
It is. It is. I find it fascinating that you live in Vietnam and you're kind of a citizen of the world. You and my friend Lawrence Bensdorp is another one. He does the same thing. He's now in Brazil just because he chooses to be. He wanted to learn how to speak Portuguese.
It wasn't planned. I came here and there's no welfare system. So you immediately see that every last person is hustling. Every last person wants to do a side hustle, a side job or something. And I think also, too, when you notice that a society, people might say, well, this sounds like you are kind of a jerk, Mike. No, but I'm not being a jerk when I say this. I truly enjoy being in a society where people are taking better care of themselves physically. It says something about the overall direction. So all these little things, you don't expect to show up in a country that America was once bombing that seems to be leading with the American dream better than America. That's very strange to me.
What do you see over here in the United States? The Vietnamese showing up and doing the nail parlors and stuff. My wife goes to a Vietnamese person down in the Scottsdale area to do her nails. They work 7 days a week. All of them work 7 days a week, hardly ever take a vacation. They send money back home. They just strive like crazy to better themselves. That's very refreshing to me. There's a certain energy about being in the midst of a whole bunch of people that are all doing that, because it makes you almost want to match their energy. It keeps you alive. I mean, one of the things that's been fun about enjoytheride.world is I got all these other traders asking me questions, and some of them are good questions, and they stimulate my brain and say, hey, I ought to go check that out. I need to get a simulation platform going on that one. That might be a fun thing to look into and just understand, because it's something I haven't looked at before. And that stimulates me. But if everybody's just sitting on their laurels and all buying CDs, I'm not being stimulated, and it wouldn't be nearly as much fun to be part of.
There has to be a challenge in our life. The moment the spring unwinds completely, it's over.
There's nothing else.
Yeah. Hey, I know you need to go eat. Tom, where can we send people? What's the main website these days? I know it's Enjoy the Ride.
Well, enjoytheride.world is the website that has all my trader education stuff on it. It's got all your interviews and a whole bunch of other interviews. We've got videos, we got webinars I've done, we've got books that I've recommended, including this one you and I just did. So it's all there, all my explanation of how I hedge my stock portfolios. That's enjoytheride.world. I'm Tom at trendstat.com, which I've been for about the last 35 years or something, email-wise. But I'm on Twitter, Facebook. For Facebook, don't send me a friend request. Just go to the Tom Basso page and follow me. That's where I put all my posts. My personal one, I put pictures of my granddaughter when I go out in the ocean with her or something. There's nothing there for traders. If you want to see what I'm doing there, Facebook on the page side. I'm also on parlor.com and MeWe, and I like both those platforms. Probably like MeWe better as the way it's structured. I don't know if it's caught on mainstream yet.
Well, hopefully one day when COVID passes and the flying system opens up again, I'll make it your way. I'll get you and Eric out for dinner down there.
Eric and I go out to lunch usually about once every 3-4 months, and he's another brain trust. He blows me away mathematically. He's one of the guys of the world that when I'm having lunch with him, I got to really pay attention to what he's talking about, because sometimes some of the words he uses are 6-syllable and then they're pushing my brain a little bit. But he talks statistics. He's a really smart guy, and I love him. He's like a son to me. I get to see him tomorrow in the board meeting, so it'll be fun. But he's a sharp kid. He really is.
Well, Tom, is always good. And again, fun stuff with the book. Let's see how it does. I told you an email. I'm a kind of a long tail guy. I really do believe it's one of those things that will, so many people spend all kinds of money to try and make a dent on that first week. But all of my books have done very well over time. So I think that's part of at least that's my perspective.
Yeah, I think that's fine too. I mean, I think the amount of press and positive comments we're getting have all been on balance very, very good. So I'm very pleased with the launch and happy to go with the flow with it. It's all going to get interesting, I'm sure.
Well, let me get off the phone with you because this episode is immediately going to my editor because it goes live on Thursday nights. So there you go.
Okay, Michael. Michael, it's always a pleasure. I always enjoy talking to you, and best of luck with your part of the book. Enjoy the ride.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.